ஏய் ஜாயின் பண்ண முடியுதா பாரு சீக்கிரமா. என் ஆ எனக்கு காட்டேன் ப்ளீஸ், எனக்கு வீடியோ கால் வா ப்ளீஸ். காட்டு காட்டு. ரெஃப்ரெஷ் பண்ணு, ரெஃப்ரெஷ் பண்ணு. 2 minutes காட்டுதா? என்னடா யாருமே ஜாயின் பண்ணலையேன்னு பயந்துட்டேன். ஹலோ. எஸ் சார், டெல் மீ சார். யா யா ப்ளீஸ் டெல் மீ சார். சார் ரெஜிஸ்ட்ரேஷன் க்ளோஸ்டு சார். Registration closed. You can purchase the recording on Monday. Okay. I am disconnecting the call because I am sitting in the webinar. Thank you. நான் பயந்துட்டு என்னடா யாருமே ஜாயின் பண்ணலையே என்னாச்சு அப்படின்னு. எனக்கு தெரியாதுல்ல. நான் சொல்லல, என் சார்பா சொல்லு. எனக்கு 5 minutes முன்னாடி ஜாயின் பண்ண முடியும். is having a beautiful breakouts or anything, I will be sharing in that Telegram channel. So please check your email. More than 10 emails I have sent from yesterday. From yesterday till morning, even in the morning, 6, 7, 8, 9, 9:30. So 5 emails I have sent to your registered email ID. So check your registered email ID, check your spam folders everywhere. Please check. I have already shared the Telegram channel joining link. Okay. So the reasons which you have shared is a common reasons. Some common reasons why people are losing in stock market. But as a technical analyst, I personally feel people don't know the trend. Now let me say an example. Uh, let's say let's say you know the trend is bullish. Okay, so let's say you know the trend is bullish. Now what you will do? So the trend is bullish. So now what you will do? In options, I'm asking in options. Yes. So very simple. If you know the trend, let's say if you know the trend is bullish, you will buy a call option or you will sell a put option or you will buy in futures, right? So there are a lot of uh, options available. You can take any credit spread, debit spread, anything. But still you people are losing money. The outcome, what happens, you are still losing money. Why? You know the trend, the market is bullish. You are buying a call option, but still you are losing money. Why? The reason is you actually don't know what is the real trend. Okay, you actually don't know what is the real trend. That's the reason you are losing money. If you are staying with the trend in a perfect manner, then your call option should make money, your put option should make money, or your futures should make money. So that is what we are going to see right now. We are going to understand the trend first of all. Once you understand the trend, 50% of your work is over. We are going to see the trend and then we are going to take a position. That's all. So finding the trend is what very, very, very important. So that is what we are going to see right now. So to identify the trend, I personally use uh, this Dow theory. Now let me share a simple presentation which I used for, which I generally use for most of the events to identify the general trend. Let me open it. Where is that? The Wealth Expo. Okay. So let me share my screen. So this is what we were talking right now. So why traders lose money? So the first point is people don't know the trend. Okay. Even if you know the trend is bullish, you are losing money. Yesterday the market was bullish. How many of you lost money? Please post it in the chat box. Please be honest. I am not going to see your terminal. I am not going to check your positions. Please be honest with yourself. Yesterday the market was super bullish. How many of you lost money? Please tell me. Yes. So many people have lost money yesterday. Many people have lost money yesterday. Correct. So why? Why you lost money? It is because, do you agree? It's because of your poor entry and exit. Do you agree? Yes or no? Do you agree? If you agree, please tell me agree. Yes. So you know the market is going up, you know the market is bullish, the market is above CPR, the market is above previous day high, the market is above R1, R2, R3, but still you lost money. It is because of your poor entry and exit. Okay. There are many days, your entry and exit also will be perfect, but still you will lose money. There are many days like that. So there are many days your entry and exit will be perfect, but still you will lose money. It is because of the trading against the overall market sentiment, trading against the overall trend, etc., etc. Okay, so these are the things which we are going to see right now. So to identify the trend, the first step is we need to identify the trend. Now, how do you identify the trend? The first step to identify the trend is using the simple Dow theory, finding out the higher highs and higher lows. What is the trend in Nifty? What is the trend in any particular stock? You have to identify the trend like this only. So let me share the chart and let me show you. Once you identify that, it will be easy for you to take a position. It will be easy for you to trust the direction. So everybody can see my chart. So this is Nifty 50s chart. So what you have to do is you have to check weekly time frame or you have to check daily time frame. Weekly and daily time frame should be sufficient to understand the overall direction. Now this is weekly time frame of Nifty. Weekly time frame of Nifty, you can see Nifty is making higher lows. Nifty is going like this in weekly time frame. Correct? Nifty is going like this in weekly time frame. So you can see every time the support is going higher and higher and higher. So this is a bullish trend. This is how we find out a bullish trend. And you can see here resistance is also going higher and higher. Every time the resistance is also going higher and higher. So whenever the trend is bullish, the market will be going like this. So this is called as a bullish trend. So first of all, we have to see what is the trend. So Nifty weekly time frame is bullish. Now come to daily chart and try to find out the trend. In daily chart also we can see the trend has changed from bearish to bullish. Now you can see over here, Nifty was bearish. Nifty was coming down every time. Now if you see, Nifty is going up. Can you see? Nifty is going up and now Nifty is consolidating. So in this area, Nifty was having a bearish trend because every time the resistance is coming down and every time the support is coming down. So this is a bearish structure in Nifty. Now if you see here, if you observe, the support is going higher and higher. So now the trend has changed from bearish to bullish. So here the trend was bearish. And right now the trend is bullish. So what you have to do, just simply look at the chart. Just spend 1 minute in the chart and try to find out whether it is having higher high or whether it is having lower high. Just see with your naked eye. So right now Nifty is having higher lows. The support is going higher and higher. And right now Nifty is consolidating. So these are the higher lows. See, every time the support is moving higher and higher. Correct? If weekly is bullish and daily is bearish, we have to focus more on daily time frame. Now we have to focus more on daily time frame. Now you can see in Nifty, weekly is bullish. We can see over here. Weekly is bullish. So weekly is going higher and higher and higher, right? So weekly is bullish in this area. But if you see in daily chart, we can see in daily chart, the trend is coming down. Every time the trend is coming down. So we have to focus more on the daily time frame only, because the trend changes in daily time frame first, and then only in weekly it will reflect. Because in weekly it will take so many weeks to change the direction. Weekly is like a truck, okay, and daily is like a car. Car can easily turn, but truck, it will take some radius to turn slowly. So it's like that. So whenever you are looking at the daily time frame or weekly time frame, just try to understand whether it is having a higher high structure or lower low structure. Always remember, if the structure is like this, it is a bullish trend. We need a structure like this. If the structure is like this, it is a bearish trend. We need a structure like this. But please remember, we don't want any structure like this, because this is a sign of a range bound market, and it is very, very difficult to trade in a range bound market. We always need a bullish market, or we always need a bearish market. Clear? Please don't forget. These are the areas, these two are the trend where we can make easy money, and we can make huge money as well. Okay, but we don't want a sideways market. So right now Nifty is in a sideways market as per daily time frame, because it is inside this particular range for so many days. But overall it is having a bullish structure only. Overall, if you look at the daily chart, it is bullish only. Slowly it is going up. Slowly Nifty is going up. But right now it is stuck inside a range. We don't want any range like this. And then what you have to do, you have to go to the hourly time frame. Please remember, once upon a time I was using 1 hour chart. My old students know that very well. But right now I am using 75 minutes chart. And once upon a time I was using 30 minutes chart. But right now I am using 25 minutes chart. Okay. The reason is, our market is having 6 hours 15 minutes. Our market is 6 hours 15 minutes. So our market, you all know very well, our market opens at 9:15 and it closes at 3:30. So 6 hours 15 minutes our market is trading. So we have to give importance to all the candle. Okay, we have to give importance to all the candle. So I am using 75 minutes for 1 hour chart, and I am using 25 minutes for half an hour chart. So going forward in this webinar, if I am saying 1 hour, please remember I am saying 75 minutes. And if I am saying half an hour chart, please remember I am saying 25 minutes chart. Okay. If you are still using 1 hour chart, you can use it, no problem. There will not be any bigger difference. And if you are using 30 minutes chart, still you can use it, no problem. There is no bigger difference. But what I will advise is, better you can start changing from 1 hour to 75 minutes and start changing from 30 minutes to 25 minutes. Okay, if you change the time frame, it's good. Okay, because we are giving importance to all the candle. That's the reason. Okay, so after seeing all the trend in daily time frame, in weekly time frame, etc., then you have to come to hourly time frame and you have to check the trend. Now this is what I said in hourly. I don't want any trend like this. These are the trends which we don't want to happen. See, a dead range bound market. These are the market very difficult to trade and very difficult to make money. Non-directional traders will like this market. Okay. Non-directional traders. They will love this market. Whereas I am a directional trader. So definitely I will hate this market. Okay. Definitely I will hate this market. Now I will ask you one interesting question. Uh, Let me create a poll. Okay. I'm having an option to create a poll. So let me quickly create a poll. Give me a minute. I'm creating a poll. Okay. Let me see. Let me see if I can share the poll. Yes. Okay, I've launched a poll. Please check it and answer it. Quickly, very quickly. Everybody. Everyone. Still few people are yet to answer the poll. Still 10 people left. 10 people, those who have not yet answered the poll, please answer it very quickly. All right. I think we can, I think I can end the poll. So we have got maximum answers. Okay. So I hope you can see the results. Can you see the results? Can you see the results? All right. So you can see 76% people have answered option sellers is making money. I agree. I completely agree. Now I will share another poll. Okay. Maybe you can save these results. You can take a picture or you can note it down in your diary. So 76% of the people are saying that option sellers are making money. Now let me share you another poll. Okay. Uh, so this time let's see the answers. Okay. So this one will be very interesting. Okay, now let me share this poll. I'm going to share the next poll. Now let us see the answers. Please answer this poll. What is the nature of stock market? Maybe you can imagine as Nifty or Sensex or in general stock market. What is the nature of stock market? What is the true potential of stock market? What is the true potential of stock market? I need answers from everybody. Everyone, please answer the poll. Only few people are left. Very few people are left. Everyone, please answer the poll. Very few, very few. Anyone who is listening and who has not yet answered the poll, please submit your poll. One or two people are left. I don't want to leave anybody behind. Please answer the poll. All right. So let me share the results. So you can see the results. What is the nature of stock market? It is bullish for long term. 80% of the people have answered bullish for long term. Right? Bullish for long term. Okay, so again you can note down the results. 80% people have answered bullish for long term. Now, why I ask this poll is, if you see the trend of Nifty in weekly or in monthly, let's see monthly. So we are seeing the chart of Nifty 50 from 2000. Let's see from 2000. So what is the trend? What is the trend in Nifty? So long back in 2001, 2003, Nifty was around 1000 and now Nifty is around 25,000. So in the long run, Nifty is bullish, right? Nifty is bullish. In short, Nifty is directional, correct? Now, is Nifty looking like a range bound structure, or is Nifty looking like a bullish structure? Can you please post it in the chat box? Is Nifty looking like a bullish structure or range bound structure? Okay. Now let's compare poll 1 and poll 2. In poll 1, who is making money in stock market? You all said option sellers. Okay. So option sellers in general, they will be a non-directional traders, correct? So option sellers, they always like yes or no? Option sellers, they always like non-direction, correct? But in the long run, stock market is bullish, correct? So option sellers are making money in stock market. Now option sellers, most of the option sellers are non-directional traders. Okay, but if you check the chart, in the long run, market is bullish. So should we remain as a should we follow non-directional option selling or should we follow directional option selling? You answer me. You people answer me. Again, I will ask this in poll. This will be the last poll. What should we do? Non-directional option selling or should we follow the directional option selling? So again, you people have to answer me. You people posted in the option. So option sellers are making money. Market is bullish in the long run. So how to use both in our favor? How to use both in our favor? So market is bullish, market is directional, option sellers are making money. So I have to combine both and I have to do directional option selling. Agreed? Please submit your answers in the poll so that everybody can see what you are trying to tell. What is your mindset? Let everybody know. Few people are yet to submit the poll. Please, everybody, please participate in the poll. Everyone. Very few results. Again, 2-3 people are pending. Yes. Come on. All right. So see the results. So this is what we are going to do. Option sellers are making money. So we are going to do both option buying and selling. And market is directional in the long run. So I'm going to use both. I'm going to do directional option selling. Clear? Again, you people are very smart. I know today's people are very, very smart. You know many very big option sellers, you all know. Right? You all know very big option sellers in our country. Now, what I will say is, I will say one single thing about option sellers in our country. Big option sellers. Once upon a time, most of the option sellers were non-directional. They never follow technical analysis. They never trust direction. But right now, most of the option sellers are directional traders. They are trusting technical analysis. Do you agree or not? Yes or no? Do you agree or not? Once upon a time, option sellers were non-directional. They never trust the direction. They never trust the technical analysis. But right now, most of the option sellers, they are following the direction. They are trusting technical analysis. Yes? Yes. You all agree. Right? So, this is what we are going to do. We are going to do directional option selling. More based on the direction, we are going to do option buying, selling, both. I will cover both. Okay. So you can see in weekly time frame of Nifty, the trend is bullish. In daily time frame of bullish, the overall trend is bullish. The overall trend in daily time frame is bullish, but right now temporarily the trend is range bound. The trend is range bound. As per hourly chart, you can see the trend is range bound. So this is favorable for non-directional traders, but it is not favorable for directional traders like us. If the market is going up continuously, we will buy call option, we will sell call option, we will sell put option. But if the market is coming down continuously, what we will do? We will buy put option, we will sell call option. But if the market is like this, selling both call and put is very, very difficult for us because we are directional traders. Okay. So how to tackle these kind of situations we will cover in coming slides. We are going to cover that. So right now we are trying to identify the trend. We are trying to study the trend. Now let me open some other index and let's try to understand the trend. Let me open Nifty IT. So what is the trend in Nifty IT? By looking at the chart itself, you can say, guys, you no need to spend too much of time. What is the current trend in Nifty IT? Maybe I will start from weekly chart. So this is weekly chart of Nifty IT. So what is the trend? What you have to observe is you have to observe the major nooks and corners. Just observe the major corners of any particular instrument. You will understand better. Okay, you will understand better. Just try to observe the major corners of that particular instrument. So right now, what is the trend in IT? Yes, IT is having a V-shaped recovery, and right now IT is having a bullish structure because here is the support. Let's assume like this is support 1. After that, the support 1 is on the higher side. So from here, the support has increased. Correct? And here is the resistance 1. Maybe you can assume this as resistance 1. And right now, the resistance 2 is on the higher side. So right now, what is the trend? The trend is bullish. That's all, very simple. Then you check in hourly time frame. In hourly time frame also, you can observe the trend is bullish because the support is getting increased. IT is going up, it is coming down, it is going up, and again it is coming down. So the trend is bullish in IT. Clear? Now let us quickly go to other sector. So this is how you have to understand the trend first of all. Let us check energy sector. What is the trend in energy sector? I need quick answers so that we can go to the next step. Quick answers only. What is the trend in energy? Bullish, right? Just observe the corner, guys. Just observe the corners of every particular area. So the support is going up and the resistance is also going up. This is how you observe the trend. Now let me open Nifty Metal. Let us open Nifty Metal. So what is the trend in Nifty Metal right now? So just try to observe the corner of every candles. Okay, this is like a common support. This is a support zone. So let me go to any other sector. Let me go to automobile sector. So you can see over here, every sector seems to be bullish. Every sector is having a higher low structure. Nifty Realty, Nifty Commodities, Nifty Consumer. All the sectors are having a bullish structure. Now let me open any particular stock. Let me open Sun TV. I'm just opening a random stock. What is the trend in Sun TV, guys? What is the trend in Sun TV? Just observe the corners. Observe the corners of every particular area. So it's coming down, it's going up, it's coming down, and it's going up. So what is the trend right now? Yes. So it's bearish structure. Correct. So those who answered bearish, you people are right. You people are right. So let me go to Jubilant Foodworks. Yeah. So very interesting structure. Now what is the trend in Jubilant Foodworks? What is the trend in Jubilant Foodworks? It is having lower highs also. It is having higher lows also. Now what is the trend? Again, so I will explain this. So just observe Jubilant Foodworks for past 3 months. Maybe from April to April, May and June. Okay, try to observe the trend for past 3 months. Okay, maybe we can consider March also. So from March, what is the trend? Again, it is having a higher low, but it is having a lower high. So it's like we are waiting for a breakout. This particular stock is not having a proper direction and it is waiting for a breakout. So both bulls and bears are having equal energy. If you observe this particular area, bulls are having energy. And if you observe this particular area, bears are having energy. So both bulls and bears are having equal energy. Both bulls and bears are having equal energy. So anytime we can anticipate a breakout. So sometimes these kind of structures will form, and these kind of structures are having a huge potential for a breakout. Huge potential for a breakout is there. Now let me open any other stock. Let me open L&T. Let me open any other stock. So what is the trend in REC? Just observe the past 3 months so that you will understand the direction better. So similar to what we saw in Jubilant Foodworks, this Rural Electric Corporation, REC, is also having a similar kind of structure. We are waiting for a breakout. Clear? Again, a tough call. So we are waiting for a breakout. Almost it has broken down, but still, now if you observe the trend line, now if you observe this particular trend line, it has broken down, but it is taking support here. So we cannot consider the trend line as a breakdown. This support is also there. So the trend is not clear in REC. So we are waiting for a breakout. Again, please remember, this is not range bound like this. This is a range bound structure. The high will be equal, the low will be equal. This is a structure of a range bound market. But this is not a structure for a range bound market, because this is slowly getting ready for a huge potential breakout. Understood? These are good candidates for a breakout. Slowly it will get compressed, and then there will be a blast in the prices. So sideways market is totally different, and these kind of markets are totally different. So by now, I hope you all are clear with how to identify a trend. Just observe the corners, every corners of the chart. So what is the trend right now? So what is the trend in Exide Industries? So clear, right? Yes. So most of the people are clear with the direction. So now let me come back to Nifty. So we are back to Nifty. So Nifty daily chart is having a range bound structure, and in hourly chart is also having a range bound structure. Now, how do we plan our entries? Now, can you understand why Nifty was bullish here on this particular day? And can you understand why Nifty was bullish yesterday? Because Nifty is traveling from the support towards the resistance. Clear? So Nifty is traveling from support towards the resistance. Nifty is traveling from support towards the resistance. And now also Nifty is traveling from the support towards the resistance. So we have to play the boundaries whenever the market is range bound. So we have to trade the boundaries whenever the market is range bound. Okay. So now once you identify the trend in using Dow theory, so this is what we call as Dow theory. So this higher high structures, So this higher high structures and lower high structures, this is what we call as Dow theory. So please note it down. The first step to identify a trend. The first step to identify a trend is using Dow theory. As I said earlier, I will not be providing any materials. I will not be providing any PDF, etc. So please take your own notes. So the step one is to identify the trend using Dow theory. So just to check whether it is having a higher highs or higher lows, so that we stay with the trend. So whenever we are having a higher high structures, we will stay with the bullish trend and we will be very, very careful when the market is bearish. And whenever the market is bullish, whenever the market is having lower lows, lower highs, what we will do, we will be trusting the bears, and we will be very, very careful when the market is bullish, whenever in these kind of structures. Now the next thing what we will do is, we will reconfirm the trend using the CPR. Now I know the market is range bound. I know the market is range bound here. So how this month is going to be? Whether bulls will take control. Now so far we don't know who is having control, correct? We know the market is sideways here. We know the trend is sideways. But still we don't know who is going to take charge. Whether bulls are going to take control or whether the bears are going to take control, we seriously don't know. So to identify that, we will use monthly CPR. So you all know this is my CPR indicator. So just use the auto mode. You can see over here, just use the auto mode and it will show you monthly CPR in daily chart. Whenever you are using a daily time frame, it will show you the, maybe I will show you that indicators. So this is daily time frame. You can see the chart time frame here, and this is the indicator I'm using. So I'm using the monthly CPR. Clear? So when you are looking at the trend in daily time frame, you can understand that the trend is having a range bound structure. But who is going to take control in coming days? Who is going to take control? Who is having the energy? That you can reconfirm with the CPR. So I hope you all know the basics of CPR indicator, because we don't have time to cover the basics of CPR indicator. So here the prices are, though the daily time frame is showing the trend is range bound, in CPR the prices are above CPR. So what is the trend? Who is going to take control in coming days? Can you answer me? As per Dow theory. So as per Dow theory, the trend is sideways. As per CPR, what is the trend? So the trend is above monthly CPR. So it is expected to be bullish. Am I right? So Dow theory is telling me the trend is sideways. But as per CPR, the prices are above monthly CPR. So the trend is expected to be bullish. Very simple. That's all. Now, similar way, I am going to show you for hourly time frame. Okay. So this is 75 minutes chart. This is hourly time frame. As I said earlier, in hourly time frame, the Nifty is having a range bound structure. We don't know the trend clearly. But who is going to take control? Let me check with hourly CPR. So this is weekly CPR. I hope you all know the settings. Okay. So probably let us quickly look at the slides. So this is what we saw. We saw for a bullish trend and we saw for bearish trend. Okay, and we saw a lot of examples. Okay, so these are the basic stuffs about CPR. Most of you guys, you know very well. So this is a CPR indicator. So there is a narrow CPR, there is a very narrow CPR. So there is a wide CPR, there is a very, very wide CPR. So I have given the differences. So again, this you can call it as a medium size CPR also. Okay, this is a medium size CPR also. Medium size CPR. So this is a very narrow CPR. So wide CPR, very wide CPR. You all know very, very well. And then there is a lot of types with respect to CPR. So if you are planning for a breakout trading, then focus more on narrow CPR, focus on inside CPR, focus on ascending CPR, descending CPR. These are the types of CPR which gives you breakout trading. Please give me a minute. I will be back. Just a minute. So if you are expecting a breakout trading, then you have to focus on these types. And if you are focusing on some mean reversion trades, reversal trades, then you have to focus on trend reversal CPR, virgin CPR, camera line side CPR, CPR attract candle. So all these strategies are in my YouTube channel already. So no need any special explanation. And there is a no trade zone, like whenever there is a white CPR, outside CPR, overlapping CPR, candles are inside CPR. So these are the areas where you should stay away from trading. All right. So these are some basic stuffs about CPR indicator. I hope you all know well. If you don't know any of these strategies, please refer my YouTube channel. Everything is available there. So these are the settings which we are going to use right now throughout this webinar. So maybe you can note it down in your diary. So first step is we are going to identify the trend using Dow theory. You are clear with that. So this is step 2. This is step 2. So we are going to identify the trend using CPR. Okay. We are going to identify the trend using CPR. So these are the settings. So in a daily time frame, you have to look at a monthly CPR. And in an hourly time frame, you have to look for weekly CPR. And in 5 minutes time frame, you have to look for daily CPR. Okay, so in CPR, just use the settings as auto. Go to the indicator section. Go to the indicator section and go to community scripts, search for CPR, bots by KGS, my indicator will come. Apply that. Even if you have turned on all these levels, okay. Now let's say you are going to my CPR indicator settings and you have turned on all the settings like this. Now change here into auto. Once you change there, automatically it will change according to the time frame. You no need to do anything. Just change it from manual to auto. It will automatically change according to the time frame. If you are using hourly time frame, it will change into weekly CPR. If I am using daily time frame, it will change it to monthly CPR. Okay. And if I am using 5 minutes time frame, it will automatically changes to daily CPR. So if you don't know how to use this CPR indicator, maybe again about this indicator, YouTube video is there. So you can refer that YouTube video. Okay. In this settings, go to the CPR settings over here. So here you can see the CPR indicator settings. Click on the settings. And change it to auto. Automatically it will select the time frame and it will select the CPR. You no need to do anything. So we checked who is going to take control. I know in daily time frame, as per Dow theory, the trend is range bound. But who is going to take control in coming days? Okay, so I will share the YouTube video link later. Okay, you can ask in the evening. I will share the YouTube video link. So maybe you can listen right now. So now the prices are above monthly CPR in daily time frame. So bulls are likely to take control. And in 75 minutes chart also, as per Dow theory, we saw just now, we saw the trend is range bound. But who is going to take control? That you can easily identify using the CPR. So the prices are above weekly CPR. So who is going to take control? Obviously, bulls are going to take control. So we are looking at identifying the trend. We are looking at identifying the trend. So let's check a few other indices, like who is having control. Check in daily chart and then check in hourly chart. That is the. So earlier we saw Sun TV. Sun TV is having a bearish structure like that we saw, right? So let's see as per CPR. So as per CPR, what is the trend in Sun TV? Whether it is below or above. So what you have to do is, can somebody answer? What you have to do is, so this is the CPR of Sun TV. If the prices are below CPR, whether it is a bull candle or bear candle, it doesn't matter. If the prices are below CPR, then it is bearish only. By looking at the bull candle, don't say it is bullish. Okay. If it is below CPR, then it is bearish only. Similarly, let us look for Jubilant Foodworks. I think we saw Jubilant Foodworks. So in Jubilant Foodworks, we discussed the trend is we are expecting a breakout. This is what we discussed in Jubilant Foodworks. This is what we discussed in Jubilant Foodworks. So who is going to take control? We don't know. Let us check with CPR. So who is going to take control? Now can you tell me? So this is CPR. Who is going to take control? Yes. Now change the time frame to 75 minutes. Let's see who is going to take control. So this is 75 minutes chart with weekly CPR. Just to look at the CPR and the price location. You have to see whether it is above or below, that's all. So again, bulls are having control. Yes, very clear. So now in Sun TV, now I wanted to check Sun TV hourly chart because Sun TV we saw it is below monthly CPR and we said the trend is bearish. Now let us check in hourly chart. So yes, hourly is also below only. So the trend is bearish, right? Now, I wanted to ask you all one question. Like, so we are seeing Dow theory in, we are looking at Dow theory in weekly time frame, we are looking at daily time frame, and then we are looking at hourly time frame. After that, we are looking at CPR. Now, when we are using CPR, in daily chart, we are using monthly CPR. And in hourly chart, we are using weekly CPR. Why we are using monthly CPR and hourly CPR? Why we are using monthly CPR and why we are using weekly CPR? I will tell you why we are using monthly CPR for a daily chart and why we are using weekly CPR in hourly chart. I will tell you. See, when you are going to a function, let's say you are going to a marriage function, or let's say you are going to a business meeting or something, how you will dress yourself? Will you dress elegantly? Will you wear a new dress? Will you wear a party wear dress? Right? When you are going for a marriage function, which dress you will wear? You will wear a party wear, correct? Yes or no? Now let's say you are going for a business meeting. Which dress you will wear? You will wear some formal wear, right? Maybe you will go in blazers, you will go in suits, you will go in, you will have a full hand, you will tuck in your shirts, you will have a formal shoes, right? Now let's say you are going to meet your friends, or let's say you are going to Goa. You are going to Goa, or you are going to Kerala, you are going to some vacation place, Andaman, you are going to some Thailand or Malaysia, anywhere going for a vacation. So what dress you will be wearing? You will be wearing very casual dresses, correct? So similarly in CPR, there is a character. If you understand that character, it will be easy for you to make money. Every indicator is having a unique character. Every person is having a unique character. Every person, every particular object is having a unique character. So see, same way CPR is having a unique character. To understand that unique character, we are using these different types of CPRs. So when I am using, why I am using monthly CPR? To understand the trend in monthly time frame. I can easily understand the trend in monthly time frame. For the entire month, I can easily identify the trend. That is why I am using monthly CPR. So the entire month, it will show me the direction. Whether it is bullish or bearish, that is very important to identify the trend throughout the month. Now, if you see, if you look at the previous CPR, so this is May 1st trading day. That is May 1st trading day, and this is the May last trading day. So this is May 1st trading day and this is May last trading day. So what is the trend for the entire month? The entire month Nifty is above monthly CPR. So the trend is expected to be bullish. So to identify the trend for the entire month, we are using monthly CPR and we are using daily time frame. Now similarly, if you look at April month, this is the first trading day and this is the last trading day. So now what is the trend in what was the trend in April month? Initially in the month of April it was below monthly CPR, it was having a bearish bias, but later on the prices came above monthly CPR and it was having a bullish bias. So the entire month trend can be understood using monthly CPR. So monthly CPR shows the trend for the entire month. Weekly CPR shows the trend for the entire week. Understood? Clear everybody? Yes? Clear? Can you please post it in the chat box? Can you tell me, are you clear? Yes. So let's assume now today the date is 21st June. Today the date is 21st June. Now let's say we are in the 1st of June. Okay, so you can see over here, this is June 2nd. This is June 2nd. And you can see the prices are above monthly CPR. Since it is having a single dot, you may or may not, you people cannot see. So let me draw a zone and show. Okay, let me draw a zone in CPR and let me show you. So this is monthly CPR. And this is June 2nd. So what is the trend? What is the trend? The candle is above monthly CPR in the 1st of June, in the 2nd of June. First trading of June, it is above monthly CPR. So what mindset we will have? This entire month Nifty is going to be bullish. And right now, if you see in 21st of June, see Nifty is above monthly CPR and it is having a bullish bias only. Correct? So it will help you to understand the trend for the entire month. Okay. So this monthly CPR helps you to identify the trend for the entire month. And weekly CPR helps you to identify the trend for the entire week from Monday to Friday. If you see here, from Monday, June 16th till yesterday, June 20th, Monday to Friday, 5 days it will show the trend. So based on the previous week calculations, it will show you the trend for the current week. Okay. So monthly CPR shows you the entire month trend. Please note it down. So monthly CPR shows you the entire month trend. And weekly CPR shows the entire week trend. And daily CPR shows the entire day trend. Clear everybody? Everyone clear? So this is what you have to note it down. Yes, always if I am saying hourly chart, it means 75 minutes. See guys, please ask your questions later. During the Q&A session, you can ask your questions. So right now, please note it down in your diary and you can ask your questions later on. So monthly CPR in daily time frame shows the entire month trend. Weekly CPR in hourly time frame shows entire week trend, and daily CPR in 5 minutes time frame shows the entire day's trend. That's all, very simple. So everyone, are you clear with this? Everyone, are you clear with this monthly CPR? So monthly CPR in daily time frame, are you clear with monthly CPR in daily time frame identifying the trend? It will show you the entire month trend. Everybody clear? And weekly CPR in hourly time frame to understand the entire week trend. Clear? Is it also clear for you? Both weekly CPR and monthly CPR is clear for everybody? Yes, I want you people to check charts. Okay, I want you also, everybody is clear with monthly CPR and weekly CPR. I want you to check the trend in your favorite stocks. So monthly CPR is clear and weekly CPR is also clear, right? So open your charts right now for 10 minutes. Now the time is 11:50. 10 minutes till 12 o'clock or 12:05. For next 15 minutes, you people are going to look at the charts and you people are going to tell me the trend in the chat box. Now let me show you for TCS and you can follow the same method. So you have to open, let's say I'm selecting TCS. Okay, so what you have to send me is you have to type in the chat box like TCS. Okay, so daily below monthly CPR. So the trend is bearish. Okay, now check in 75 minutes. So 75 minutes is also below weekly below the CPR. So type the same. So hourly below weekly CPR. So the trend is bearish. Like that, like this, you can type and send to me in the chat box. Yes. Correct. So like this, you send to me in the chat box. Open your charts right now. Open your charts and send to me in the chat box. You can select any stock. Preferably select from Nifty 50 or any FNO stock. Any favorite stock you can select. But please don't select any penny stocks. Select some reputed stocks and don't copy others' stocks. I have selected TCS, so nobody should select TCS. See, type the complete message and send. Anbarasu, see, everybody send like how I have sent you the message. Type completely and then you send to me. One by one, please don't type. See, select any stock, guys. Select any stock, please. It is your choice. Select any stock of your choice. Type the message completely and then send to me. Type the message completely. Anbarasu, what is the trend in Tata Motors? Anish, what is the trend in Persistent? Shashidhar, mention only CPR. No need of R1, R2 right now. If any particular stock is above R1, then please consider it as above CPR. Don't mention R1 or R2. Don't mention S1 or S2. Just consider above monthly CPR, above weekly CPR, or just consider below monthly CPR, below weekly CPR. That's all. So Amit Agarwal has selected Hero Motocorp. Let me cross check what he has sent to me. So Hero Motocorp is uh, below hourly CPR bearish, correct? Above monthly CPR bullish, correct? Perfect. So Madhu has selected Pidilite. So let me cross check Pidilite. Below monthly CPR bearish and below hourly CPR bearish. Perfect. So SBI card is selected by Nagaraj. So let me open SBI. Uh, SBI weekly is bearish and monthly is bullish. Perfect. Perfect. Very nice. Very nice. See, Sachidanandan, just type the stock name in the chart, it will come. It's not so difficult. Just type the stock name in the chart. Perfect. So everybody is clear with the charts? Everyone clear? Understood? Time up, time up, time up, time up. Everybody clear? Excellent. Bala Nagendran, excellent. Bala Nagendran has sent for many instrument. Nifty, Bank Nifty, Reliance, HDFC Bank, ICICI, SBI, L&T. Very good. So hope everybody is clear. So right now the time is 12:15 at 12:05. Let's take a 10 minutes break. Let us be back at 12:15. All right. Let us go for a break and let us come back at 12:15. Welcome back, guys. Yes. So let me share my screen. So far we just understood the trend in daily time frame as well as in hourly time frame. So now it is going to be very, very easy for us. So what can we do is, hmm. So yes, this is what we saw right now. Like daily chart, we saw monthly CPR. So only by using daily chart, you can easily plan your swing trading. The purpose of looking at a daily chart and monthly CPR is to identify the overall trend, and you can plan your swing trades also. Similarly, you are looking at hourly time frame, you are using weekly CPR, and again it can be used for swing trading. You can plan your swing trades based on the hourly chart. Okay. And 5 minutes chart is purely for day trading, and we will be using daily CPR that we will see later. So right now we are going to plan our trades in daily time frame. So before that, let me talk about this moving averages. Okay. So we saw how to identify a trend using CPR and using Dow theory, etc. Now we are going to add additional indicator called this moving average. Okay. And it helps us greatly to plan our entries and exits. Okay. And it helps us to identify a high probable trade opportunity. Okay. So we will discuss about moving averages. So whenever the trend is bullish, as per Dow theory, we will have a higher high, higher low structure. And whenever the trend is bearish, we will have a lower high and lower low structure. So this is as per Dow theory. You know very well. Now after that, once you identify the trend, you will check with the CPR. So whether the candles are above CPR or whether the candles are below CPR, you will be trying to identify, right? So this is above CPR, or whether the prices are below CPR, we will try to identify. So I'm talking only about bullish and bearish concept. So this is based on the CPR, and this is for bullish, and this is for bearish, and again this is for bullish, and this is for bearish. Okay. All right. So now we will try to understand the moving averages also. So this is the character of Dow theory in a bullish structure, and this is the character of Dow theory in a bearish structure, and this is the character of CPR in a bullish structure, and this is the character of CPR in a bearish structure. We want the prices above CPR in a bullish trend, and we want the prices below CPR in a bearish trend. Now, similarly, CPR moving average is also having a unique character. we will discuss about that character right now. So let me switch off the indicator names so that I get more space to draw. So in a bullish trend, let us see how the moving averages looks like. So in moving averages, we are going to use three moving averages, namely 20, 50 and 200. Okay, 20, 50 and 200. So whenever the trend is bullish, 20, we want the 20 to be rising, and we want the 50 below 20, and 50 also we want to be rising. So this is how we want the structure. So for time being, forget about the 200 SMA. Okay, just observe the 20 and 50. So this is for a bullish trend. Now in a bearish trend, 20 will be going down and 50 also will be going down. And this is for a bearish trend. So along with the existing concept which we have seen so far, so we saw about Dow theory and we saw about CPR. Along with this existing concept, we are going to plan the moving averages. So the main reason why we are using moving averages is it helps us to time our entry. Two reasons we are using moving averages. Okay. The first reason is for a high probable trade. Because always we want, let's say we are taking 10 trades. We want all the 10 trades to be successful. Correct? Nobody wants to lose money in the stock market. If I ask you, like you are taking 10 trades, do you want to win 9 trades and lose 1 trade, or do you want all the 10 trades to be successful? What you will choose? Everybody will choose, I want all the 10 trades to be successful. Nobody wants to lose money. Nobody wants to lose the trade. I'm taking 10 trades. I want to win all the 10 trades. This is how we will be looking for. So to plan our high probable trade, we are using moving averages. There are two reasons. And the next reason is to buy any particular option at a fair price. So fair price in the sense, it's like the correct price. So let's say, for example, the cost of an iPhone is 1 lakh rupee. Cost of an iPhone is 1 lakh rupee. Will you buy iPhone at 2 lakh rupee? Yes or no? Cost of an iPhone is 1 lakh. And will you buy it for 2 lakh? No. Correct? You will not buy. So why you will not buy? Because you want to buy at 1 lakh rupees only. So same way, whenever we are buying a call option or whenever we are buying a put option, there is a correct price. There is a fair price. So we want to buy at that fair price only. We don't want to buy at an expensive price. I want to buy at the correct price only. I don't want to buy at a cheap price. I don't want to buy at an expensive price. I want to buy at a correct price only. Clear? So these are the two reasons why we are using moving averages. So now let us see how the moving averages are looking like in a bullish trend and how the moving averages are looking like in a bearish trend. Okay. So let us look at some charts. So I have turned on the moving averages. So I always represent 20 SMA in green color. Okay. So 20 SMA will be in green color and 50 SMA will be in red color and 200 SMA will be in black color. So I want you all to follow this color pattern so that tomorrow or next week when you are sending me a chart, it will be easy for me to identify. A few people are using different colors, no problem. But when you are asking doubts to me, when you are sending charts to me, it will confuse me. The colors will confuse me. So I want everybody to follow this color code. 20 SMA green, 50 SMA red and 200 SMA is black. Okay. Yes. So let us look at some charts. So look at this particular trend. So just observe the structure of, I want you all to observe the structure of moving average. So here you can see the trend is bullish. In this particular area, the trend is bullish. The prices are making higher lows as per Dow theory. The prices are making higher highs also as per Dow theory. So you can see here very clearly. So this is what we saw in Dow theory, identifying the trend. And then what we will do, we will look at the CPR. Whether the prices are above CPR or below CPR, we will be looking at. So here you can see the prices are above CPR. So in the month of June, the prices were above CPR. In the month of July, the prices are above CPR. And in the month of August also, the prices recovered and came above CPR. And in the month of September also, the prices came above CPR. So the trend is bullish as per Dow theory and as per the CPR. Now what we are going to do is, we are going to check the structure of the moving average also. So you can see the moving average also will be aligned in the bullish structure only. It will be aligned in a bullish structure. It will also show you the trend. So whenever the 20 and 50 are rising like this is what I have drawn and shown you. Whenever the 20 and 50 are rising like this, then the trend is going to be bullish. Okay. The trend is bullish, the market will go up. Even now you can see the structure of the 20 and 50. The 20 and 50 are rising. So the market is bullish, the market will go up. So here also you can see whenever the 20 and 50 are rising and falling. This is a very perfect example. Maybe you can open the Nifty chart, go to 2023 and you can see. So here the 20 and 50 are falling, the trend is bearish. And as per Dow theory also you can see the prices are going down slowly. Slowly they are going down. And here also you can see the prices are going up. Slowly they are going up. Slowly they are going up. Correct? So in this area, the prices will be below monthly CPR. In this area, the prices will be above monthly CPR. So this is a trend where the market is bearish, and this is the area where the market is bullish. So here it is bull and here it is a bearish trend, right? So you can confirm with the CPR also. So here you can see the prices are repeatedly trading below the monthly CPR. And here the prices are trading above monthly CPR. And the moving average also shows the direction. Earlier I said, I want the market to go like this. I want the market to come down like this. I don't want the market to be in sideways. I said, correct? So same way, whenever the market is having a bullish Dow theory, you will see 20 and 50 going up like this. Okay. So whenever there is a bullish Dow theory, the market will be going up like this. The moving average will be like this. Whenever the market is having a bearish Dow theory, the market will be going down like this. So this is a very perfect example. So here we are having a bearish Dow theory, and look at the 2050 structure. Here we are having a bullish Dow theory, and look at the 2050 structure. So this is the pattern we want in any time frame. Whether you are using daily time frame, I want this pattern. Whether I am using hourly time frame, I want this pattern. Whether I am using 5 minutes time frame, I want this pattern. Because remember, these are the pattern where we can make very good money. These are called as high probable trade opportunity. High probable trade opportunity means the chances of winning is very, very high. Chances of winning is very, very high. Clear? And whenever the moving averages are like this, whenever the market is in a range bound manner, or whenever the moving averages are like this, no, here look at the structure of moving average. The moving average is not rising. The moving average is not falling. A complete a zigzag moving average. Maybe you can call it like that. A zigzag moving average. So these are the signs of a sideways market. These are the signs of a range bound market. So what? So already I have said, I want the moving average to be rising, or I want the moving average to be falling like this. So whenever the moving average is like this zigzag, what we will do, we will not follow the moving average because it is sideways, correct? We will not follow the moving average, but we will focus more on the CPR. So whenever the moving averages are zigzag, immediately what you have to do, you have to turn off the moving average. Don't focus on the moving average because it will confuse you. Because it is showing us range bound, correct? So there is no point in using the moving averages. So whenever the moving averages are zigzag like this, immediately turn off the moving average and focus more on the CPR indicator. That I will tell you. Right now in Nifty, the moving average is rising. So you can keep the moving average and CPR together. No problem. Moving average, CPR. You can keep together. No problem. Okay. Now, if you check hourly chart also, you will find the same thing, which is interesting. So look at this particular area. This is what I said. Currently, in Nifty 1 hour chart, look at the moving averages. What is the structure? The structure of moving averages zigzag. So immediately what you have to do? Immediately turn off the moving average and give more importance to the CPR only. Immediately turn off the moving average, focus more on CPR. When the moving averages are rising, then you can start using once again. So maybe in this location, look at this location. The moving averages are falling. So when the moving averages are falling like this, then you can keep it in your chart. When the moving averages are rising or falling beautifully, then you can use it. So in this location, the moving averages are rising, you can use it. So in this location, the moving averages are falling, you can use it. But the moment moving averages are zigzag, please turn it off and don't focus on the 20 and 50 because it is flat. So it is like a no direction. 20 and 50 are not rising, 20 and 50 are not falling, they are flat, they are zigzag. So no point in using. So immediately you have to turn off the moving averages. So earlier I was planning my trades based on the CPR and moving averages. Earlier how I was trading, let me show. So let's say this is CPR. Okay. So this is a CPR. So earlier what I used to do is, I used to wait for the 20 and 50 to rise like this. And what I used to do is, I used to wait for the candle to come up. Sometimes what happens, the candles will come and they will take support at the 20. Or sometimes what happens, the candles will come down to take support at 50. What I used to do is earlier, simple moving average only, not EMA. So what I used to do is, once the 20-50 structure is formed, I used to draw a line at the day high. I used to draw a line at the day high like this. And I used to wait for that line to be broken. Only then I will plan my trade. So what happens? The prices will come up once again. Okay, slowly the prices will come up and then this particular high will be broken. Like this, the prices will be broken. Then only I will plan my entry. So this is where I will enter. So this is where what I used to do, I used to buy call option. So this is my, this is how I was trading earlier. Even my old students know that very well. We wait for the 20 and 50 to form a parallel structure. We wait for the day high to be broken. We will not take any, if earlier what I used to do is, I will not take entry at 50 SMA. I will not take an entry at 20 SMA. I will wait for the day high to be broken. I want this particular orange color line to be broken. That is compulsory for me. That's why I have drawn a line to show you. This is called as day high, today high. We wait for the today high to be broken, then only I used to plan a trade. Now, right now, you all know very well, in this one, for the past 1 year, the market has changed a lot. The market has changed a lot. Everyday expiry was there, and then everyday expiry was removed, and then the volume of option traders has dropped significantly. now Nifty expiry is going to change to Tuesday and Sensex expiry is going to change to Thursday. So a lot of dynamics have changed in the market. The structure of the market has changed drastically. So what happens? Every now and then we have to tweak our strategy according to the market condition. So what I have done is, I have tweaked my entry points. So what I used to do, instead of taking a trade when the day high is broken, I will be taking a trade when the candles are taking support at 20 itself. When the candles are taking support at CPR also, I will be taking a trade. Let me show you. So let's say, for example, this is daily chart with monthly CPR. Let's say I am having a bullish bias, and let's say I am buying a call option, for example. So I am having a bullish bias. So the prices are above monthly CPR and I am having a bullish bias. So let's assume I am buying a call option. I'm an option buyer. Let's say I'm buying a call option, for example. So what I do, I will be taking an entry here itself. Let me mark my entry. Let me select an arrow mark. So as soon as the prices are taking support at CPR, I will take an entry. If a single bear candle comes below CPR, now let's say on 1st of June, I am taking a long entry in call option in monthly expiry, because this is monthly CPR. This is monthly CPR, so monthly expiry. So I'm taking a call option. My stop loss will be, I don't want a bear candle to come below the CPR. For example, this is a CPR. A bull candle is taking support at CPR. Now I will take a call option. Now the condition for stop loss is, I don't want a bear candle below CPR. So this is the CPR. I don't want any bear candle to close below CPR. If a bear candle is closing below CPR, then I will book my stop loss and I will exit. I will book my stop loss and I will exit. If there is no bear candle, then I am not going to exit. Okay. So this is the condition for my stop loss. So according to that particular logic, the 1st of June, I am planning my entry. I am taking my entry in the first bull candle. So the next day, there is a bear candle. What I will do, I will exit. I will book my stop loss and I will exit. Now what I will do, again you have to re-enter when there is a bull candle. Now you can see over here, in this candle you are getting a re-entry. So your stop loss is not getting hit. Your target will be R1. You all know very well. This previous month R1 is there. That is going to be a target. As soon as the prices reaches that particular level, you are going to book your profits. Now, once again, you can see here, the prices are giving me a long opportunity in this bull candle. So once again, you will buy a call option. Your stop loss is not hit. Your target is going to be R1 and previous month high. This is your target. Okay. So please remember, stop loss is, I don't want a bear candle to come below CPR. Please understand. That is why I have drawn here. Assume this is CPR. Assume this is CPR. Okay. When a bull candle is taking support at CPR. When a bull candle is taking support at CPR, you can plan your long, you can take a long position. And your stop loss is, I don't want a bear candle to enter inside the CPR. See, this candle is entering inside CPR. If a bear candle is entering, rejection candle is no problem. No need to book your stop. Now let's say there is a bear candle like this. Let's say there is a bear candle like this, you no need to exit. You no need to exit the trade. Wait till 3:30. Yes, closing basis. Closing basis. Wait till 3:30. This is because this is a daily candle, right? You will know the entire candle around 3:15, 3:20 only. Or after 3 o'clock only you will know that you will know the color of the candle. So if there is a rejection candle, no problem. But around 2 o'clock or 3 o'clock, if there is a full size bear candle, then exit. Understood? See, if you understand the entry, stop loss and target as per monthly CPR and daily candle, then it is easy for me. It will be easy for you in 5 minutes chart. So first of all, try to understand the entry in daily chart. So let me show you. Check this. So right now we are going to see about the swing trading using monthly CPR. Okay. And this is the entry criteria. You can see over here. So bullish entry criteria. I want a bull candle at CPR. So I want the candle to be like this. You have to take a trade. So I'm talking about entry using daily candle. So your trade timing will be 3 p.m. to 3:30 p.m. Because we are talking about daily chart. We are talking about daily chart. So your entry is between 3 to 3:30 p.m. Okay. So between 3 to 3:30 p.m. you have to plan your trade. And this is the entry criteria. We need a bull candle above CPR. And stop loss is if there is a bear candle below CPR, you can exit. But generally what you can do is, even if a bear candle comes above TC, you can exit. You no need to wait till BC. You can exit at TC also. Clear? If it is a narrow CPR, then wait for the candle to close below CPR. But if it is a wide CPR, what you will do? So if a bear candle is entering inside CPR, you exit. So this will be your stop loss. And your target will be always R1. Your target will be always R1. Okay. Clear, everyone? On the month starting, you have to enter. Yes. So this is for swing trading using daily chart and monthly CPR. So in the first week, you have to enter. First week, within the first 10 days, you have to enter. Now let's say if it is June, you have to take your entry before 10th of June. If there is an entry before 10th of June, you have to plan your entry. So this is before 10th of June. So where you will enter? If you are a buyer, you will enter at first candle. You will enter at this candle. Okay. So these two entries are valid. And again, you can enter in this candle also. No problem. No need for moving averages. Using CPR also, you can take an entry. Now, how you can use moving averages in this area? If the candles are above moving averages, it gives you an extra edge. It gives you an extra edge. Now there are areas where now if you look at this particular area, the first candle is exactly at the moving average. Can you see? The first candle is exactly at the moving average. And here, this candle is also exactly at the moving average. There is no proper candle close. Now here you are having a proper candle close above 20 SMA, but here and here, assume this is first location, second location, and this is third location. In the third location, the closing is very nice, but in the first and second location, the closing is not proper, right? So in these cases, you can take a trade based on the CPR. Still you can take a trade based on the CPR. You no need to worry like, sir, the candle is taking resistance at 20. Should I take this trade or not? You no need to worry. Now, same way you can see over here. Candle is above CPR. You can plan your trade. You no need to wait for the candle to close above 20 SMA. Moving averages give an extra edge in lower time frames. In higher time frames, you can just use it as identifying the trend. Let me come to this. So we were talking about the entry in daily time frame using monthly CPR. So let me draw the moving averages and show you here. Now, whenever the candles are above CPR, you are going to plan your long entry. So we want the 20 SMA structures should be like this. The 20 SMA structure should be like that, and the 50 SMA structure should be like this. So this is 50 SMA and this is 20 SMA. Okay. We want the 20 and 50 SMA structures to be like this. If the high probable entry is mostly at the CPR, and at that time, if the 20 and 50 is in your favor, you can plan your entry. It gives an extra edge to plan your trade. Clear? Now, let's say the candle is above monthly CPR, you are planning to take a long entry. And at that time, if the 20 and 50 are in your favor, if the 20 and 50 are rising, then it gives you an extra edge to plan your trade. You can you can take that trade with some higher quantities. Now, let me show you a few more stocks. Some good trending stocks, let us see, instead of a range bound stock. Strike price will be at the money because this is monthly CPR, right? See, this is what I was talking about. Now, in this case, if you see, you can plan your entries here, though your target is very closer. In this case, you have to plan your target like R1 and previous month high 50%. This should be a target because very nearer target you cannot plan. So this is how you plan your trade. I'm talking about this structure. When you are taking your trade, if the 20 is providing supports, or if the 20 and 50 structure is like this is the favorable location. This is the favorable location. See, this is the exact location I was talking about. This is the exact location I'm talking about. I want the candle to take support at CPR, and I want the 20 SMA also closer for planning my trade. Now wait, let me show you. See, this is what I am talking about, guys. So this is 5 minutes chart. See, this is 5 minutes chart. See, this is what I was talking about. This location, this exact location where the 20 and 50 are ready to rise. So yesterday, this is the location where I was taking my trade. Okay. One minute. Okay, so the bar replay option is not coming. So this is the location I was talking about. I want the 20 and 50 to be rising, and I want the candle to be closer to the CPR levels like CPR, R1, etc. So let me show you some other area for better understanding. So this is what I was talking about. So this is the location I was talking about. Where the candles are closer to the moving average as well as the CPR level. See, this is what I was talking about. Our entry should be always closer to CPR or CPR levels, like closer to CPR in the sense I am talking about CPR, R1, S1. So all these three areas are the entry locations. Okay. You can plan your entry at CPR, you can plan your entry at R1, you can plan your entry at S1. Okay. At that time, at that particular location, if the 20 is acting as a support or resistance, at the same location, if 20 and 50 are rising or falling, it will gives you an additional edge. Now, if the trend is bullish, you are going to take a trade at CPR at or around R1. Now, in this location, I will tell you. So the prices are below CPR. This is a bearish trend. You are going to take your trade when S1 is getting broken, correct? At that location, I want 20 SMA to act as a resistance, correct? At that location, I want 20 and 50 to be falling, correct? So all the three conditions are satisfied. So where you can plan your entry? You can plan your entry. You can plan your entry here. You can plan your entry here. Okay. And also you can plan your entry below S2 also. Understood? Understood what I'm trying to say? See here, this is the exact location I am talking about. This is the exact location I am talking about. Clear, everybody? In 5 minutes, it happens frequently, but in daily chart, it happens occasionally. But I wanted to convey that high probable location. Understood, everyone? Can you please post it in the chat box? So this is a 5 minutes chart, but I want you to imagine this as a daily chart for a time being. Just imagine this as a daily chart for a time being to understand the concept. To understand the concept. So if you see here, 1 minute, guys. I hope my screen is not freezing. So Bharat Raja, maybe you are having some internet connectivity issue. So please check from your end. So this is a medium size CPR. Please remember, guys, I want you to imagine this as a daily chart. Just imagine this is a daily chart with monthly CPR. Okay. Now you want to answer me. Can I take a long entry in this candle, in this particular candle, in this particular bull candle? Can I take a long entry? Yes or no? Everybody, please answer. Can I take a long entry? Because the candles are taking support at CPR. It is satisfying a condition. See here. Correct? Entry is when the candle are taking support at CPR. Correct? So can I take a long entry here? So can I take a long entry at this particular location? Let me draw an arrow mark in this candle. Yes. So now let's say you have taken a trade. Now look at our stop loss criteria. So this bear candle is closing below the CPR, correct? This bear candle is exactly closing below the CPR, right? Below TC. It is entering inside CPR. So that is a stop loss hit, yes or no? That is a stop loss hit. I don't want you to wait till the candle closes below CPR because your losses would be bigger. I want you to close your trade when the candle closes below TC itself. Understood? Technically speaking, your stop loss should be below CPR only. So technically if I want to speak more technically, above CPR bull candle is your entry, below CPR bear candle is your stop loss. But in most of the cases, you are entering here and you are exiting here. In most of the cases, you cannot afford a bigger stop loss like this. You got my point, right? That's the reason I am asking you to. You got my point, everyone? Technically, closing should be below bottom CPR. Technically, the candle should close below 3 CPR levels. That is the stop loss, technically speaking. But I don't want such a bigger stop loss. I am not trading to lose money because we should be very, very careful in losing money in the market. So what I am doing, I am restricting the market. Even if the candle closes below 1 CPR line, I will book my stop loss and I will exit. Understood? So now my entry is here. My exit is here. So look at my stop loss, very small. So you want a small stop loss or you want a bigger stop loss? You tell me. Small stop loss or bigger stop loss? Even if a bear candle closes below any CPR line, you exit. So we want a small stop loss. Always your risk should be very, very, very small. Okay. So now you got my point, right? So now come back to our entry. Now let us come back to our entry. So as per my logic, in these two candles you can enter, especially in this bull candle you can enter. And this is yours and your stop loss is hit, correct? Your stop loss is hit, correct? Because please remember, this is a daily chart. I want you to assume this as a daily chart. Forget about 5 minutes right now. Assume this is a daily chart and assume this is a monthly CPR. I want you to understand the concept. See, this is my way of trading in recent time. A little bit of psychology is involved. Yes, stop loss which is closing below upper line of CPR is my stop loss, correct? So here my stop loss is right, hit, yes or no? Please tell me. Because the candle has closed below the top CPR line. So this is my stop, this is the top CPR and this candle is closing below top CPR. My stop loss is hit, right? Yes. Now I want you to focus on the moving average. Now I want you to focus on the moving average. Now, when I am taking my entry in this bull candle, 20 is below 50 SMA, correct? 20 is below 50 SMA, correct? So don't take this entry. What I'm trying to tell is, take a entry where the CPR and the 20 SMA are together providing support. So this is the correct entry. Now you understood or not? So the reason why your stop loss is hit is 20 SMA is not in proper alignment. 20 SMA is not in the proper alignment. That is why a small bear candle came and it has given you a stop loss. But whereas what I will do, I will enter only in this candle because both CPR and 20 SMA is providing support. That is why I am telling you this is a high probable entry. More filtering, exactly. I am more filtering my entry. I am very strict in filtering my entry. Always take your entry at the closing only. Whether you are using 5 minutes or 75 minutes or daily chart, wait for the closing. Before the candle closing, you enter. Last few seconds, few minutes, you have to enter. If you are using 5 minutes chart, last few seconds. If you are using hourly chart or if you are using daily chart, last few minutes you can enter. Wait for the close. So this is what I said in my presentation. Okay, this is what I said. Whenever the candles are taking support at CPR, that is my entry. But I want 20 SMA also in my favor. Understood, everybody? Understood, everybody? Why I am filtering like this? Because these are the trades where my losses are very, very less. So this is what we call as a high probable trade. High probable trade. So 20 and CPR together works like a magic. It gives you a small stop loss and it gives you a bigger target. Okay. In daily chart, if it happens, no, it will be like a blockbuster trade for you. But it happens. See here. At times what I'm trying to tell is at times you will get entries like this. See here. If you see here, the candle is inside 20 SMA. So this is where, this is June. I hope you people remember, this is the election result. Prime Minister Modi was selected for the third time. So election results were happening on this particular day. So here you can see we are having a narrow CPR. So we are having a narrow CPR. That entire month is going to be trending. And here the candles are closing above CPR. So this is your entry, correct? As per CPR, that is your entry. Now, as per moving averages, you can, as per CPR, you can enter here also, no problem. The main important thing is the structure of the 20 and 50 is important. Now here what we will think, 20 is the candle did not cross 20 SMA. That is how you will think. But still you can take a trade because the 20 and 50 is in your favor. The 20 and 50 is in your favor. Still you can take a trade. You can even take a trade in this doji candle. You can even take a trade in this doji candle. Now let's say if you are taking a trade in this bull candle, your stop loss is CPR. Any bear candle closing below CPR is your stop loss. If you are taking a trade in this doji candle, any bear candle below 20 SMA is going to be a stop loss. Understood? So here also you can take a trade. If you are if taking a trade above CPR and above 20 SMA is a very, very perfect trade. It gives you easy money. It gives you easy money. Let me try to show you in stocks. See here, this is what I am talking about. Look at this location. This is HDFC Bank. Candles are above CPR, correct? Candles are above CPR. You can take a trade there. At the same time, 20 SMA is also providing you the supports. So this is a high probable trade. Understood? And look at this location also. In the month of April, 20 SMA is providing support in the month of March and April. Okay, 20 SMA is providing support. Candles are taking support at CPR. So these are the excellent entry locations, some high probable entry locations. Yes, exit is always R1. R1 is your exit. Wait, first understand the logic. I will talk more about the entry and exits. Let's first understand the entry and stop loss. I will talk about stop loss. I will talk about the targets also. Don't worry. So look at this location. See, this is what I'm talking about. Now in this, now assume you are in January. Assume you are in January. Here, when you will take a trade? Assume you are in January month. Okay. Let me go to January. So this is HDFC Bank. See, HDFC Bank is below monthly CPR. I hope you can see the monthly CPR. So here is the monthly CPR. So the candle closed below monthly CPR. Can you take a shot? Can you take a shot? Yes. Now in that location, once again. One minute, guys. One minute, guys. Some issue. Okay. One minute. Actually, the time period of moving average was changed in HDFC Bank. Okay. So look at this location. So the candle is below monthly CPR. You can plan your short trade. Yes. Yes, you can take a short. Now, in this location, what I want, just imagine in a bearish trade, in this location, I want the 20 to act as a resistance and I want the 50 to go like this, correct? Yes or no? In a bearish trend, I want the 20 and 50 to be like this. So this is how I want the structure of moving average to be positioned. So this is what I call as a high probable trade. So this is what I call as a high probable trade. Now any structure of moving average apart from this will be considered as a low probable trade. So what you have to do is basically you have to reduce your quantity size. So now let us check the structure of moving averages. So here you can see the 20 and 50 SMA is not in my direction, correct? I want the 20 and 50 to be like this, but the 20 and 50 is not like that. So what you have to do is you can take a short position but reduce your position sizing. Now maybe in a high probable trade, you have to take a position. You can deploy 80% of your capital, more than 80% of your capital. But in a low probable trade, you have to deploy less than 50% of your capital. Probably 40% of your capital you have to deploy. Understood? The reason for differentiating a high probable and low probable trade is to decide how much capital I should deploy. Now, let's say your capital is 1 lakh rupee, okay, and you are finding a high probable trade like this. Then what you have to do is you have to take a position for 80% of your capital. Take your position for 80,000. Okay. But if the structure of moving averages is not having a high probable setup, then take position only for 40% of your capital. Clear? Now this is a high probable location. You can take a long position there. The candles are above CPR. Candles are taking support at 20. So this is a high probable trade. You can deploy your 80% of your capital. Okay. But this is not a high probable trade. This is a low probable trade because 20 is not giving resistance. It is not like the structure which we want. So you have to take a position only for 40% of your capital. Understood? Understood? So my entry is always at CPR. When I'm taking my entry, I want the 20 and 50 to be positioned accordingly. Now see here. Is this now I will show you some examples, you will understand. I will show you. See, Chandrasekhar, I understood your question. I will come back to your question later. Candles are above monthly CPR. Candles are taking support at 20 SMA. This is a high probable trade, yes or no? Uh, take a screenshot of this chart. This is the structure I want. Target is CPR, previous month high and R1. This particular zone is your target. Let's say the candle reached previous month high. If you want, you can exit. Or you can wait for R1 also. You can wait, no problem. Now look at this example. See, the candles are taking support at CPR and they are above 20 SMA. This is a high probable entry, yes or no? Look at this particular candle. High probable entry, yes or no? I am marking high probable entry for you to understand better. So these are all high probable entries. Understood? Now also we are having a high probable entry. Understood? I want this location, guys. I want this structure. So HDFC Bank is enough for you to understand high probable trade. Anything apart from this is a low probable trade. Anything apart from this, Chirag Dev, if you see here in June, the first entry, your target is not near, it easily went to your target. Okay. In the second entry, the entry candle itself reached the target, so you can avoid that particular entry. Again, it depends on the size of the candle, that is out of our control. See, May month, Nifty, all the indices are range bound. Rajkumar, we saw in Nifty, this particular range, this particular area is range bound, right? So that's the reason it did not reach the target. It depends on the global market sentiments also. The entire Indian market is range bound between May and June. First, I want you to understand the high probable structure. So this is how a high probable structure will be looking like. Clear? The next time you see a structure like this, you should understand this is a high probable structure. So I have shared the screenshot of my chart so that you people will understand the high probable location. So when I mark and show, it will be easy for you. I need a similar example. Look at this entry here and here. Both are high probable short, right? Yes or no? Guys, are you there? Check this example. I'm showing you for high probable short. Okay. Just understand the structure, how it looks. Just understand the structure, how it looks. I want you to understand the structure, how it will be looking like. Okay. See here. see this location and see this location. High probable trade. Understood? This one also. Understood, everybody? High probable trade. This is how it looks. See, Satyabhatra, what you have to understand is, for long entry, we can take at CPR. We can take at R1 also. At some cases, we can take a entry at R2 also. Okay. Correct. So, Venu, you are right. If there is a bear candle below 20, we can exit. Sashidhar, I have answered this question. You can see, you can take your entry at CPR, at R1 and at R2 also, at some cases. If taking an entry above R1, your target is R2. Taking your entry above R2, your target will be R3. See, we are not going to trail our profits. We are not going to trail our stop loss. So you all understood how a high probable trade looks like, right? See, this is also a high probable trade. See here. See, for in a bullish trend, we can take a entry at CPR. We can take a entry at R1. We can take a entry at R2 also. These three locations are good, but R1 and CPR are most preferred locations. R2, the entry will be very rare. First, understand how the structure looks like. Once you understand the structure, then it will be easy. So you all understood how a high probable trade looks like, right? Yes, we can go for lunch. Let me show one last example. Look at Reliance this particular month. This candle also you can take your entry. This candle also you can take your entry. Okay. So this candle. So these are all entry candles. Understood? Even now you can enter in Reliance. Even now you can take a long entry in Reliance because it is above R1 and it is above 20 SMA. So in this case, your stop loss will be below R1. Any bear candle below R1 will be my stop loss. No, I have changed the chart. I think the issue is with your screen. Rakesh. So just first you just memorize the pattern. So this is what I said. This is Kotak Mahindra Bank. Look at Kotak Mahindra Bank. This month, the 20 and 50 structure is not rising or it is not falling. So what we will do? We will switch off the moving averages. We will not focus on the moving averages. but still you can plan your trade using the CPR. You can still plan your trade using the CPR. And what we will do is we will reduce the quantity. We will reduce the quantity and we will take a trade. So there is a lot more to discuss. No worries. Okay. There is a lot more to discuss, so don't worry. So this is what I am. This is a location where a very tight location. See here. A very tight location. So here the candles came above 20 SMA and then the trend was good. The candles came above 20 SMA and then the trend was good. Clear, everybody? So I think we will go for lunch. We will come back after lunch and then we will discuss. So probably we will resume the session in another 30 minutes. So now the time is 1:40. So we will come back around 2:15 and then we will resume the session. Okay. Setup itself, I want you all to simple. I want the 20 to provide trading in a medium CPR. Not going to trail our so you guys no need to end the session. You no need to close the session. You can just keep it on. Okay, and you can go for lunch and then you can come back. The time is 1:40. Please join. Please come back at 2:15. Okay, please come back at 2:15. Don't exit the session. Just keep it open. You just go back and you come. Okay. So this is R1. Assume this is R1. Okay. In case of a long position, yeah, just go back and you come. So I can understand that few people are having some queries related to the entry and exit part. So I will ask you a few questions. You will understand even better. Okay. So what happens in a narrow CPR? Can anybody tell me? So narrow CPR means what can we expect on a narrow CPR? Trending market, correct? So we can expect a trending market. So what we can do? We can take a huge position, right? Now, for example, Friday Nifty itself is a very good example. Friday Nifty is a very good example. What happened on Friday? Narrow CPR trending day, correct? So narrow CPR, it's a trending market. So you can take a huge position. You can take some good position sizing. Once the direction is clear, you can easily take a huge position. But on the other hand, if it is a medium CPR, what you will do? Now coming back. Now let's say it's a medium CPR. So it will not be trending like a narrow CPR, but we can take a trade, right? We can take a trade. Moderately trending, we can take a trade. We can take a less position sizing. Now in a narrow CPR, you are expecting a trending day. You are taking position for more than you are taking position for 80% of your capital. You are taking more than 70% of your capital. Let's say your capital is 1 lakh. You are taking position on a narrow CPR for 70,000, for 80,000. But in a medium CPR, you are taking position for 40-50% only. Okay. So you will not avoid trading in a medium CPR. You will trade. Correct? Wide CPR, it is a sideways market. You can avoid trading. But if you want to trade, take less position. Correct? Wide CPR, range bound market, you will not trade. You will avoid trading. But if you want to take a trade, take very less quantity. In 1 lakh rupee capital, maybe you can take position for less than 30%. Take position only for 30,000 rupee. Don't take position for 80,000. Don't take position for 50,000. Take position for 20-30,000 rupee in a wide CPR. Clear? So, narrow CPR, 80% capital. Medium CPR, 50% capital. Wide CPR, 20% capital. Understood? Clear? Clear, everybody? So, why we are categorizing into wide CPR, why we are using this high probable trade, low probable trade means, see, we are putting our money in the market. Okay, it is not a, it is not, you should be very careful where your money is used. You should be very careful like where you are going to invest your money. So this is a narrow CPR. And this is a medium CPR. How to differentiate narrow CPR, wide CPR and medium CPR? See, visual representation, that's all. Don't think too much. Just a visual representation. So this is a narrow CPR. You will deploy 80% of your capital, correct? Correct, everybody? You will deploy 50% of your capital, correct? And you will deploy 20% of your capital. Clear? Understood? See, ask your questions later. See, at the end of the day, I will take all your questions. 1 hour will be there for Q&A. Okay, so that 1 hour you can utilize, you can ask all your questions. Okay, these kind of small questions, what is the percentage variation, how much distance, these things we will discuss later. First, I want to understand the concept. If I'm answering your questions, what happened, I will miss the flow. Okay, I'm in a flow. I wanted to cover the concepts. I will miss that flow. That is the reason. Okay. So this is a example for capital deployment. Okay, this is the example for capital deployment. Now try to understand. We are taking our entry. We are taking a position. If you are having a bullish bias, okay, in 3 areas you can take your trade. You can take your entry at at CPR, or you can take your entry at R1 also. Okay. So this is R1. Assume this is R1. Okay. In case of a long position, if you have missed your trade at R1, you can still take a trade at R2. Okay. But when you are taking a trade at R2, you have to reduce your capital. Now let's say in a narrow CPR, when the candles are taking support at CPR, what you will do, you will take a position for 80% of your capital, correct? You can take a trade at narrow CPR. You can take a trade at R1. You can take a trade at R2. But even though it is a narrow CPR, when you are taking a trade at R2, I am saying the top of the CPR. Okay. Now in a narrow CPR, when you are deploying 80% of your capital and when you are taking a position at R2, so this is R1 and this is R2. When you are taking a position at R2, reduce your capital because already the market has moved far away, right? So in this case, you have to reduce your quantity. Take position for 50% of your capital only. Drastically reduce your position sizing. Understood? Now same way, in a medium size CPR also, you can take a position at CPR, you can take a position at R1, you can take a position at R2. Okay. R1, R2, you can take a position. But when you are taking a position at R2, you have to reduce your quantity. Take trade only for 20% of your capital. Okay. In a wide CPR, most probably it will not go towards R2. So ignore wide CPR. Clear? Ignore wide CPR. Clear everybody? Yes? Your entry is at, I am going slowly, I am going step by step. Please understand, don't ask your questions now. So you are clear? You can take your entry at CPR, you can take your entry at R1, you can take your entry at R2. When you are taking your entry at R2, you have to reduce the quantity because already the market has moved far away. Okay? Already the market has moved far away. Okay? Now, understand one simple logic. Whenever I am taking a trade at CPR, whenever I am taking a trade at R1, whenever I am taking a trade at R2, always my favorable location is I want the 20 and 50 to act as a support. Very simple, guys. Don't think too much. Keep it simple. I want the 20 to provide support. I want the 50 to move parallel. That's all, very simple. If this structure is there, then it is called as a high probable trade. Very simple, guys. Very simple, high probable trade. That's all. If this structure is not there, it is a low probable trade. That's all. Whichever moving average is there, sir, 20 is far away. No problem. You take a trade. It is a low probable trade. Sir, 20-50 is zigzag. No problem. Take a trade. It is a low probable trade. See, why I am saying high probable trade means those are the opportunities where we can make some good money. So we have to be prepared. Clear? That's why that is why I am very, very concerned about the 20 and 50 also. Otherwise, I will simply say take a trade based on CPR. Above R1, take a trade. Above CPR, take a trade. No need moving averages. I will say and I will move on. But why we are focusing on moving averages? To consider that high probable trade. Let's say you are having 50 lakh rupee. You wanted to purchase a land. You will purchase a land inside the city or outside the city, you tell me. You are having 50 lakh rupee. You are going to buy a land for investment purpose. You will buy inside the city or outside the city. Which will give you a good appreciation? Please tell me. Which will give you a good appreciation? Please tell me. Why you want to buy inside the city? Because you need appreciation, correct? You will buy inside the city because you need appreciation. Your money want to multiply. Your money want to grow quickly. Correct? Yes. That is why, same logic guys, same logic what I am doing. I am using moving average because I want to double my money. I want quick profits. I want high probable profits. Understood? Understood? Now let's say for example, you are having 50 lakh. You are planning to buy a land inside the city, but inside the city they are telling 1 crore. But you are having 50 lakh only. Inside the city, the land value is 1 crore. You are not. So the cost is expensive. Now you don't have other options. You have to buy outside the city. Yes or no? Inside the city, the land value is expensive. You are having only 50 lakhs. Now you want to buy a land. So now you will buy a land outside the city. Yes or no? Because the land value is expensive inside the city, you are not having that much money. So you are ready to buy outside the city. Yes or no? Please tell me. Please tell me yes or no. So same way, same logic. If the 20 and 50 are not giving support, if the 20 and 50 structure is not proper, still you can take a trade. Still you can take a trade based on CPR, but reduce your quantity. Reduce your quantity. Keep in mind, reduce your quantity. Okay. Now I will give you an example. So this is narrow CPR. I will give you another perfect example. So this is a narrow CPR. Okay, so this is narrow CPR. So this is narrow CPR. And assume this is R1. Assume this is R1 and assume this is R2. Now, where is our entry location? At CPR is our entry location. At R1 is our entry location. And at R2 is our entry location. Okay. Now, let's say 20 and 50 are not proper. Let's say 20 and 50 is like this. Zigzag. Let's assume. Just imagine. Okay. So, we are having a narrow CPR. So this is a narrow CPR and this is a narrow CPR. Okay. So this is like a setup 1 and this is setup 2. Okay. Now let's say that 20 and 50 is not proper. 20 and 50 are twisted. 20 and 50 are not having a good structure. They are not having a proper structure. Okay. They are twisted like this. 20 and 50 are not rising. They are not falling. They are in a range bound structure, zigzag. This is what I said, zigzag, right? So this is a low probable trade. So though it is a narrow CPR, I will reduce my quantity. Instead of taking position for 80% of my capital, At CPR, exactly at CPR, I will take only a lesser position sizing. So let's assume this is 50 SMA and this is 20 SMA. So 20 and 50 is not proper. So instead of taking position for 80% of my capital, I will take position only for 50% of my capital. So around R1 or R2, instead of taking position for 50% of my capital, I will take position for 20% of my capital. So this particular setup 1, it is like buying a land inside city. Okay, just now I asked you a question. It is like buying inside city, and this is buying outside city. Clear or not? Yes or no? Right now, are you clear or not? Please tell me yes or no. Our entry is at CPR, our entry is at R1, our entry is at R2. When you are having these three entry, I want the 20 and 50 to be rising. I want the candle to take support at 20. That is my high probable trade. Only then I will give my money. Otherwise I will reduce my money. Very simple. Very simple. If you in your if let's say in your home, if the housekeeping is doing the work nicely, you will give incentive. If the work is not satisfied, what you will do? You will not give incentive. If the work is if the work is extraordinary, you will give additional money. If the work is not extraordinary, you will not give money. Very simple. So why we are understanding this high probable trade and low probable trade is like, it is like negotiating the market. Okay, this setup is good. I'm ready to deploy more money. No, this setup is not good. I will not deploy more money. It's like you are negotiating the setup. Understood? Understood? I want you to understand high probable trade and low probable trade. See, risk management and money management is not a separate topic. It is directly linked with your entry. Okay? It is directly linked with your entry. You have to understand the risk management and money management. You have to understand the positioning from your setup itself. Clear? So whichever setup is there, so whichever setup you see, if the setup is having the right location and the right moving average, then we will deploy. So this is what I showed you. This is what I showed you in the chart example. Now let's say, for example, so you are able to see my screen, right? Yes. So in Nifty yesterday, okay, see the entry which I showed you. So whichever entry I showed you here is applicable for all the time frame. It is applicable for all the time frame. Whether you are using 5 minutes or hourly chart or daily chart, this entry is applicable for all the time frames. Okay, so now let us look at the chart. So this is a Nifty, yesterday's Nifty 5 minutes chart. So we are having a narrow CPR. It is going to be a trending day. So where I can take my entry? I can take my entry here at R1 breakout. Or here I can take my trade above R2. Correct? So these two are my entry locations. At CPR, I can take a trade, but there is no proper entry at CPR. Correct? So R1 I can take my trade and R2 I can take my trade, correct? Yes or no? I need quick answers, yes or no? At R1 and R2 you can take your trade. Yes. So now I wanted to decide how much capital I should put in this trade, correct? There is no entry at CPR, guys. Okay. Don't consider first candle. Always don't consider first 2-3 candles. R2 is broken in the mid. I will tell you, no problem. Don't worry. Okay. First of all, try to understand your entry is at R1, R2. Okay. Don't consider the first 2-3 candles because usually we will not enter in the morning. We will wait for a few minutes only. Maybe after 3, 4, 5 candles only we will enter. Okay. So right now your entry is at R2, R1 and R2. Now I want to decide. Now I know where is my entry. Now I want to decide my position sizing, whether I should put 80% of my capital or whether I should put 50% of my capital. I have to decide using the moving average. So let me switch on the moving average. So what do you understand from the moving average? Now my entry is in this candle. My entry is in this candle, in this 2 candle. So how I want the moving average structure? I want the moving average structure like this. Yes or no? I want the moving average structure like this. Yes or no? So I will enter here. I will enter here. Yes or no? If the setup is like this, I will take call option for 80% of my capital. If the setup is not like this, I am going to take position only for 50% of my capital. Understood? Now let us look at the moving average setup. Look at the moving average. So now how much capital will you deploy in this trade? Here you are going to take an entry. Here you are going to take an entry. How much capital you will deploy? Guys, those who said 50%, you are right. Those who said 80%, you are wrong. That is why I am saying, see, let me show you the screen once again. See, I have already said you guys, look at inside city example. Look at this example, guys. I want setup like this, no? Look at the R1 structure. In setup 1, look at R1 structure entry. I want the candle to take support at 20. No, 80% you should not go. That is not the right approach. I want the current, my entry candle should take support at 20. That is important. My entry candle should take support. Got it, guys? See, this is very, very important in the long run. The understanding the high probable trade and low probable trade, it may not, you may not feel it is important right now, but in the long run, it will help you. It will help you to save a lot of bucks. See, I need a candle like this. I need a candle like this. See, this candle is taking beautiful support at 20 SMA, guys. See, the prices are above CPR. The prices are taking support at 20 SMA. So, though this is a medium CPR. Okay, this is a medium CPR. Though it is a medium CPR, look at the trending market. It went and reached R2 easily. It reached R2 easily. Understood? Candles are above CPR. Candles are taking support at 20 SMA. Okay, and the candles are above previous day high also. If you have taken an entry here, your stop loss is very small, below 20 SMA, below previous day high. Your stop loss is very small. R1 is reached easily. And even it went up to 200 SMA and R2. Understood? Understood, guys? Are you able to connect the dots right now? Slowly you will understand, correct? Slowly everything is getting clear, right? Slowly everything will be understandable for you. Now see here, this is for vice versa, for short entry. Now this is what I said, guys. Now here how much position you will take? Location 1. Here how much position you will take? Location 2. You answer me. How much percentage capital I should deploy? You tell me. I should deploy 80% or 50% or 20%. Tell me. In location 1, how much capital I should deploy? And in location 2, how much capital I should deploy? See, give both the answers together. Don't split your answers. So those who are saying 50 and then 80 are correct. See, that's all very simple. Very simple. So here I should take a position for 50% of my capital because 20 is not giving resistance. 20 is quite little bit far. But here I can take a position for 80% of my capital. That's all. Very simple. Very simple. Understood? Now you all understood, right? Outside city and inside city. So the candle should be near 20. The candle should be near 20. So what happened on that particular day? See, 20 is providing resistance continuously. Repeatedly 20 is providing resistance and then there was a huge fall. Now if you look at this particular day, the structure of 20 and 50 is not proper. 20 and 50 is zigzag. 20 and 50 is zigzag. But the candles are taking support at CPR. Now how much capital you can deploy? I have already shown this in the drawing. So it comes under outside city example. It comes under outside city example. So how much capital you should deploy in that particular setup? I have given already half of the answer I have given. 20 and 50 is zigzag. Candles are taking support at narrow CPR, a medium CPR. So how much capital? So those who said 50%, you are correct. That's all. Very simple. Very simple. That's all. So your target will be R1. R1 will be a target and your target is hit. Now here if you are planning to enter, what will be a position sizing? R1 and previous day high is broken. Here you are planning to take an entry. What will be a position sizing? So location, in this location. Correct. Very simple. Perfect. Very good. Very good. I am happy to see all are giving correct answers. So again, this comes under outside city. Okay. You have to deploy only 20%. Yes, very good. That's all. You all understood. That's all. Very simple. So in my setup itself, I want you all to listen. I want you all to focus on me. So in the setup itself, we are incorporating the position sizing and risk management. I am not teaching you the strategy. And then finally, in the last 30 minutes, I am not telling you risk 1% on your capital, risk only 2% on your capital, risk 1% on a single day. Okay, stop trading after 5% loss, stop trading after 10% loss. I am not telling like that. Inside the setup itself, I'm just inserting the position sizing, and I'm asking you to follow risk management. Clear? Otherwise, what you will do, above R1, 100% you will deploy and you will take a trade. Above R2, 100% you will deploy and you will take a trade. Above CPR, 100% you will deploy and you will take a trade. Agreed? Yes or no? So in the setup itself, we are incorporating the position sizing. When we reduce the position, our losses also will be less. Clear? Understood? So what will be the capital allocation in these two locations? Look at the moving average also. Hariram, perfect answer. Rakesh, perfect answer. Chandrasekhar, perfect. Harsh Valacha, perfect. So those who said 50% and 20%, you are right. You are correct. Okay. Because here, in the first candle, the structure is not clear. Look at the 20. The 20 is below 50 SMA. It's like a zigzag pattern. So many people are saying 80%. Why? See, Priyesh, you are saying 80-50. Why? I will deploy 80% only when the 20 is providing support. Now let me show you. See, if the 20 is like this, and if the 50 is like this, then I will deploy 80% of my capital. Understood? Priyesh, understood? But if there is no structure like this, look at the moving average. It is not like what I said. It is not like what I said. Clear? So you have to deploy only 50% of the capital. I have already shown in the drawing. See here. Look at the setup 2. Look at setup 2, you will understand. We are having in setup 2, we are having narrow CPR, but the moving averages are zigzag. I am getting an entry at CPR. So how much capital I should deploy? I should deploy 50%. This is what I said in the drawing, and the exact same setup you are looking in June 6 Nifty 50. Clear? Clear, everybody? That's what I said. We use moving averages for high probable trade and to understand the fair pricing. This is the right price. Now, if the 20 and 50 are providing good supports, that is the fair price. Now look at this area. Look at this. The market is above R1 and R2. The market is above R2. Nifty is above R2. And see, the candles are taking support at 20 SMA. They are exactly at 20 SMA. So in this particular area, how much position sizing I can take? This is a high probable trade, that is one point, and I am getting a fair price. This is the correct price to buy. This is the correct price to buy. These two reasons we are using moving average. So how much capital I should deploy? 50%. Yes, correct. Yes, position sizing and risk management, it gives, this is the key thing. See, in a winning trade, how much you are winning, and in a losing trade, how much you are losing is very, very important. And this combination helps us to determine that. Okay. So always you should not be in a mindset to take position for the entire capital. Okay. This is how retail traders are doing the mistakes. Now 2 days back, there was a news. Maybe I will share it in the Telegram channel. You can see that. 2 days back, there is a news. Still, people are losing money in options trading. Still, people are losing money in options trading. And it is because of poor risk management. I will share it in the Telegram. It is because of poor risk management. I will share it immediately. Please check the Telegram channel right now. I will share it right away. Because this is very, very relevant. What we are discussing right now is relevant. Look at that small box. On top, small box, you can see small investors lose big. No, correct? In that small box, you can see losses blamed on poor risk management by small investors. You guys saw that? So, so look at this particular box. Losses blamed on poor risk management. Correct? So this thing you should not do. That's why we are focusing on integrating the high probable trade and low probable trade to avoid your unnecessary losses. So this setup, you have to check in any time frame, you have to follow this setup, and you have to follow this particular risk management principle. Now I hope you are all clear with the entry part. Okay. You are all clear with the entry part. Let us discuss the stop loss also. Discuss the stop loss also for Nifty 50 itself. So whichever we saw in Nifty 50. . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . So now this is a narrow CPR and you are going to deploy 50% of your capital in this trade. You are not going to deploy 80% because 20 and 50 is not closer. Correct? 20 and 50 is not closer. So you are not going to take 80% of your capital. You are going to take only 20% of your capital because 20 and 50 is quite far. Now, when you are taking 50% of your capital, where will you plan your stop loss? Now your entry is here. Where will you plan your stop loss? Your stop loss is, you are taking a trade at R1. Your stop loss is any bear candle closing below R1 is your stop loss. Okay. Now let's say I am taking an entry in this candle. So this is the entry candle. Now if there is a bear candle closing below R1, I want the close to be below R1. If the close is below R1 like this, then immediately you have to take your stop loss. If the candle is rejecting, let's say the candle goes down, but at the close it will be rejecting like this, then don't take your stop loss. You can wait. You can wait. Now, when you are planning your stop loss like this, make sure you look at the options chart also. It's mandatory. You have to look at the options chart also. Okay. Let me show you. Let me show you. So above R1, you are planning to take a trade. So let's say 24,800 call. So let me open 24,800 call. Okay. And look at the timing. The time is 9:40. Clear? The time is 9:40. So at 9:40, I'm going to plan my long entry. So look at the 9:40 candle in options chart also. It is always advisable to look at the options chart also. Okay, so this is the 9:40 candle and look at the close. You please look at the close over here. Okay. So 9:40 candle is closing around 212. So let's say I'm taking an entry at 212. So exactly at 212, I have taken my entry. So I have marked a line, a blue color line. So that is my entry. Probably I will change the color. So this pink color line is going to be my entry. 212 I have entered. So how to plan your stop loss? So in this bull candle, below R1 is my stop loss. If a candle closes below R1, I am going to exit. So roughly consider this bull candle 50% as your stop loss. If a candle is closing below 50% of this candle, I'm going to exit. So you can plan your stop loss like that. So your entry is 212, roughly below 50% of this candle. Probably 200, 195 should be your stop loss. Understood? Place your stop loss and sit tight. Place your stop loss and sit tight. If you are a full-time active trader, then you, without placing stop loss also, you can observe your trade because you can exit anytime. It's not mandatory to place a stop loss. If you are a full-time trader, if you are in front of the screen, then it is not mandatory to place the stop loss. You can sit in the trade. Clear? So three conditions are there. If the candle is closing below R1, immediately exit. Even if your stop loss is not hit. Let's say you have placed your stop loss at 195. Your stop loss is not hit, but the candle is closed below R1. Immediately exit. Don't compromise. Okay. If there is a rejection candle, you no need to exit. You can sit in the trade. Now, if a single candle is going far down, okay, if it is going aggressively down, at that time you have to consider that if the candle is going, if the candle is continuously going down, and if it is staying below R1, I'm talking about the running candle, in between the running candle. If the candle aggressively goes down, try to run away from the trade immediately. Okay, don't wait for the candle close. Don't wait for the candle close. Try to run away from the market. Clear? So it is advisable to look at the options chart also for better clarity. Now in options chart, don't apply our strategy. I'm talking about entry, exit, everything in spot chart only. Don't look for entry, exit, stop loss in options chart. Okay. If you are a buyer, don't look at the options chart for the entry and exits. The moment you see a spot chart, immediately you punch your order at the market price. Clear? Clear, everybody? Are you all clear with the stop loss? So stop loss, three things can happen. Below R1, you are going to book your stop loss. If it is a rejection candle, you can wait in the trade. If the candle is going very aggressively on the downside, in between itself, you can run away and you can exit. In options chart, you are looking at the price where you can place your suitable stop loss. Why you are looking at the options chart? To look at the price. Roughly you will buy at 212. Roughly you will place your stop loss below the 50% of this candle. So for that rough calculation, I am showing you the options chart. If it is a live market, then I will punch the order and show you. But since it is a weekend, I am telling you orally. Clear? So always looking at the options chart is necessary. So this is how you plan your stop loss, and your target will be R2. Of course, above R1, your target is going to be R2. See here, this is a rejection candle, so you no need to panic and you no need to exit. No need to panic and you no need to exit. R2 is your target. You can wait. Clear? So this is how you plan your stop loss, and this is how you plan your target. Okay. So this is how you plan your stop loss. Let us go to the drawing. So here we saw for the high probable trade and the low probable trade opportunity. So as I said earlier, your stop loss is, let's say you are taking a trade at CPR. If a bear candle closes below 20 SMA, you can exit. That is the stop loss. If a bear candle closes below CPR, you can exit. That is also a stop loss. So whichever comes first, you exit. Now let's say you are taking a trade at R1, 20 is providing support. If a candle closes below 20, exit. Below 20 also a stop loss only. Below 20 SMA also you have to exit. Now let's say you took a trade here at R2. but a bear candle is closing below 20 SMA. Immediately you have to exit. Clear? So below R1 is also your stop loss. Below 20 SMA is also your stop loss. Clear? We will look at more examples. Look at this example. So here you will plan for your trade. You will plan for your entry in that arrow mark. R1 is broken, 20 SMA is providing support, you will take a trade. So as soon as the candle closes below 20 SMA, exit. That is your stop loss. So your entry is this candle and your exit is this candle. So this is your stop loss. But if you are waiting for the candle to close below R1, what happens? Your stop loss will be very big, correct? Here your stop loss is very big, but here your stop loss is very small. Understood? So 20 SMA is also your stop loss. Clear, everybody? So whatever entry I said to you in Nifty, it is applicable for any time frame. Now let us go to 75 minutes time frame. This is hourly chart. It is applicable to any time frame. Let us check. So there are some days where the market will have a huge candle like this. Okay. So here the 20 and 50 is not providing proper supports. So technically I want a 20 SMA like this and I want 50 SMA like this. Then it would be a high probable trade, correct? But actually the 20 and 50 are not having this structure. The 20 and 50 are having a zigzag structure. This is what we call as a zigzag structure. So what I will do, I will take only 50% of my position. I will deploy only 50% of my capital. Now this candle is very big. Now I have taken my entry. How will I plan my stop loss? How I should plan my stop loss? Now let's say 50 SMA is here, right? Let's say 50 SMA is here below. Just imagine 50 SMA is here and imagine 20 SMA is here. Okay. You are going to take position for 50% of your capital, correct? Now, how will you place your stop loss? Because below 50 SMA, your stop loss will be very, very big. Now, how will you plan your stop loss? Okay, 50% of my capital, if 50% of the candle means, so this is the 50% of the candle. Below 50% of the candle also, my stop loss will be very big. Now, what you will do? Already you are taking 50% of the position only. See, already you are deploying only 50% of your capital. Okay. Already your position sizing is in control. Now, how will you place your stop loss? This is where you have to understand the candlesticks. Yeah, 25% of the candle, correct. So maybe you have to divide this candle into 3 different parts. So 25% of the 25% of the candle size, 50% of the candle size, and 70% of the candle size. So below 25% of this candle, you have to exit. Clear? See, if you are avoiding trade, then that is your choice. But I wanted to tell how you should plan your position sizing and how you should plan your stop loss, I should say. Clear? But right now here, the 50 SMA is correctly positioned below 25% of the candle. Understood? The 50 SMA is exactly positioned below 25% of the candle. Clear? Clear, everybody? Your target is always R1. R1 is the nearest target. So when you are taking a trade now you understood the concepts. If you are taking a trade based on daily candle, then you can hold for that particular month. You can hold for 20 trading days because in a month there is only 20 trading days. So you can hold for 20 trading days. If you are taking a position based on 75 minutes, then you can hold for 5 trading days for that particular week only. For that particular week, 5 trading days. If you are taking a position for 5 minutes candle, then you have to hold the position for that particular day only. Don't carry forward your position. We will not carry forward our position. Clear, everybody? So, taking a position based on daily candle, it is for conservative swing trading. It is for conservative swing trading. If you are a conservative swing trader, then you can follow daily candle. And if you are a aggressive swing trader, then you can follow hourly chart. You see, first of all, you have to select, guys, who you are going to be in the market, because you know your profession. It's for day trading. So many people are working. Many people are working in IT sector. Many people are working in private sector, in public sector. There are doctors who are joining this session. So you know your time availability. Many people cannot see the screen for intraday. If you are trading in 5 minutes chart, you have to sit from 9 to 3:30. If you are not having that much time, then you have to do conservative swing trade or aggressive swing trade. Okay. So please decide who you are going to be in the market first of all. If you are a working professional who cannot see the market frequently, then focus on conservative swing trade. Look for daily chart and monthly CPR only. That is enough. That is enough. You are a working professional, but still you can spend more time in trading, then focus on hourly chart and weekly CPR. Focus on aggressive swing trade. If you are if you are having full-time, if you are a full-time trader and you want to take trading as a complete career, then you can focus on 5 minutes chart. But always, if you ask me personally, I will say you to follow daily. I will ask you to take a trade based on daily chart for at least 2-3 months, and then I will ask you to take a trade using hourly chart for 3 months, and finally I will ask you to trade using 5 minutes chart. If this will be my suggestion. Conservative trade is for options trading only. It is for options trade only. See, so far we are studying how to identify a trend and how to plan our entry. Okay. So going forward, I will tell you like which strike price you should buy and which strike price you should sell for option buying and selling. First of all, I want you to understand all these concepts. See, don't worry about the premium. Premium decay will happen in swing trading. Don't worry about the premium. First you take a trade, then you will understand how the premiums are moving. Because whatever I say about the premium, yes, see, if you are doing conservative swing trading, you have to take a trade in monthly expiry only. That is correct. Yes. So conservative swing trading, you have to take a trade in monthly expiry. So aggressive swing trading, you have to take a trade in weekly expiry. And in 5 minutes chart, of course, you have to take a trade in weekly expiry only. There is no daily expiry. Clear? So I will ask you some questions. I hope you are all clear. I hope nobody is sleeping because after a heavy lunch on Saturday, most people used to sleep. I hope you people are not sleeping. I will ask you some questions. Let me take some easy examples initially. Okay. So this is a medium CPR and this is a wide CPR. So that you will understand the position sizing clearly. Okay, so now let me go to the examples. Now I will ask you one interesting question. Uh, so this is R1. This is monthly CPR R1 because this is daily chart. So once you observe daily chart, it will be a monthly CPR. And this is previous month high. This black color line, you know very well, this is previous month high. Okay. So can I take a long position here or should I take a long position above R1? Where I should take? Can I take above previous month high or should I wait for R1 breakout also? Okay, I'm getting mixed answers. Okay. For this, I need another one good example. Um, So many people are saying above previous month high we can take a trade. Many people are saying above R1 only we have to take a trade. Okay. Now observe this location, observe this R1 and previous month high. It is very narrow CPR, correct? It is a very narrow CPR. So inside R1 and previous month high, you cannot see the distance, correct? You cannot see the distance. In this case, you have to wait for R1 and previous day high to be broken. Again, here also you can see in the month of April, it is a narrow CPR. R1 and previous month high is very closer. So R1 and previous month high is getting broken together. So in a narrow CPR, R1 and previous day high together has to be broken because the inside there is no gap at all. But coming back to the current example, here the distance inside CPR and inside R1 and previous month high itself is very big. So if I am taking a trade here, my stop loss is very small. Let's say I am taking a long position here, my stop loss is very small. And I am having more space for booking my target. I am having more space from the closing till R1. See, almost 1.5% rally. Close to 800 points is left. So I can take this trade. Understood? Inside R1 and previous month high itself, we are having enough space. So you no need to wait for R1 and previous month high together to be broken. You no need to wait for R1 also to be broken. Above previous month high itself, you can take your trade. Understood, everybody? So when you are taking above R1, your target will be when you are taking a trade above previous month high, your target is going to be R1. Very simple. So here is your entry and here is your exit. Very small trade. So that's how you have to think. Because the space is high. You are having enough space. Clear? So coming back to the questions, how much position sizing you can take a trade in this particular area? How much capital you can deploy? So look at the CPR structure and look at the 2050 and tell me how much capital you can deploy. If you want to refer, you can refer this image as well. So how much capital you will deploy? So almost two answers should be correct. Apart from 80%, if you are saying 50 or 20, both are almost right. So 50% is also right, 20% is also right. Okay. So don't take 80%, don't deploy 80% of your capital. That is the point. Now I will ask you another question. Please listen carefully. I will ask you another interesting question. Okay. So let me go to this area. Here 20 SMA is very little bit far, but still what we will do. Let's say the candle is taking support at 20 like this. Okay, so this is a white CPR, almost a white. This is a white CPR only. The distance between R1 and previous month high itself is very big, and the CPR is also quite wider. So let's say the candles are taking support at CPR and at 20 SMA. Can we take this trade? Yes or no? Yes or no? Yes, we can take a trade, right? Yes, white CPR, we can deploy 50% of our capital and we can take a trade. Yes, correct. So yes, we can take a trade. Now let me come to another location. Now let me come to this location. Now here, let's say the 20 is like this. The candle is above CPR. The candles are taking support at 20 SMA also. Now here, can we take this trade? Very interesting question, right? So here, what you can do is, see, this is a white CPR. If the candles are at CPR, now in this candle, uh, we will take a trade. In this candle, we will take a trade for 50% of a capital because it is at CPR and at 20 SMA. So we will take position for 50%. Now already it is a white CPR. The candle has already crossed some level, but still 20 SMA is giving us a entry opportunity. So either you can take a position for 20% or you can avoid this trade. If you have said 20% or if you have said avoid, both the answers are right. Okay, because generally in trading there is nothing 100%. So either you can take position for 20% or you can avoid this trade. Clear? Both the answers should be correct. Okay, so this is what I wanted to ask you. Now, if you look at the chart, uh, and if you look at the moving averages, we are getting some entries here. So you can see here, this is the result. So the candles are taking support at 20, but see, there is no momentum at all because of the white CPR. And of course, last month, every stock will be range bound only. May month and June month, most of the stocks and sectors are range bound only, but still it is a good learning. So there are some days where you will encounter a setup like this. The candles will be above monthly CPR, but R1 will be very closer. Okay. And here the 20 and 50 structure is also not proper. Now, can I take this trade or can I avoid this trade? So again, it depends on person to person. If you ask me, what I will do is, I will take position for 50% of my capital. If you ask me, I will take position for 50% of my capital, and my target will be previous month high. My target will be previous month high. I will not worry about R1. I will not worry about R1. Okay. Now here I can talk about another one, psychology. Now here I am telling, don't worry about R1. Don't worry about R1. You can take position for 50% of the capital. This is almost a white CPR, almost a white CPR. Comparing to the previous month, it is a white CPR. Previous month, February month is a narrow CPR, but March month is a quite white CPR only. So don't worry about R1. My target will be previous month high, or my target will be 200 SMA. Okay, I will take 50% of my capital. Okay. So I will tell you the reason. I will tell you the reason. See, you should not avoid this trade. You should not, if you ask me, you should not avoid this trade. Because I will tell you the reason. Please listen carefully. First of all, this is a major index. This is a bank nifty, and this is a daily time frame. This shows you the overall trend. This shows you the overall trend. So, if you see bank nifty for the past few months, it was trading below monthly CPR only. If you see here, below monthly CPR, below monthly CPR, and here also it came down and it was trading below monthly CPR, below monthly CPR, below monthly CPR. But now it is coming above monthly CPR. So think about these are all some small psychologies. The prices were trading below monthly CPR. Now the prices are coming above monthly CPR. See, the prices were not able to sustain above monthly CPR, but this time the prices are coming above monthly CPR. And moreover, the prices are reversing from an important support level. You might have heard about this double bottom, double top, W pattern, M pattern, some people used to say. The market is reversing from previous month low. After so many months trading below monthly CPR, now the candles are coming above monthly CPR. So you can consider it as a trend is changing. Yeah, correct. So the trend is changing. So the prices are trading above monthly CPR. So you should not avoid this trade. At least take 20% of your capital. At least deploy 20% of your capital. Whenever the market is coming above monthly CPR, there are higher chances it will reach R1 and previous month high zone. Whenever the market is coming below monthly CPR, most probably it will reach S1 and previous month low. And that is how it has reached. So if you ask me, I will tell, don't avoid this trade. Take a trade with less quantity and plan your target at previous month high. Don't worry about R1. Clear? These kind of setups occurs frequently. Again, you can see this also as an example. This particular December 1st day. And here also September. So these are the days the market is coming up. Here also you can consider like that kind of a setup. Okay. So these are some small psychologies which will help you to identify the trend. So still we are discussing a lot about the entry part. See, whenever you see a stock which is having this kind of a range bound structure, please avoid that stock. So whenever you guys are trading in stocks or indices, always prefer higher highs and higher lows and lower highs and lower lows. If you are seeing a stock like this, please don't take any trade. Immediately avoid that particular stock. Okay? Change the stock and go to some other good stock. Clear? Don't forcefully take any trade in these kind of stocks because you will end up in losing money. These kind of range bound stocks will easily trick you and it will pluck money from you. So don't waste your time and energy in these kind of range bound stock. Select a stock which is having these kind of higher high structures or higher low structures. Okay. So still Titan looks bullish only because of the structure in daily chart. The daily chart structure seems to be good. Though the weekly structure seems to be okay. Weekly structure seems to be having a resistance and it is coming down. But daily structure seems to be good. Focus on the past 3 months. You can see higher lows only. Okay, I am considering this as a higher low. So consider these kind of structures instead of going for a range bound structure. Again, don't select these kind of stocks which is having a range bound pattern. Okay, please don't fall into these kind of stocks. So stock selection you have to make very carefully. Otherwise, there are higher chances the market will trick you and it will take money away from you. So most of these kind of structures don't prefer taking any trades. Okay. If you are having a structure like this, some good higher high structures, look at Bajaj Finance in this location. These locations are our favorable locations. Higher highs, higher lows. You got my point, right? So we need a structure like this. But if you see a range bound structure, see right now it is inside a range. So if you see a range bound structure like this, please avoid. This higher high structure is not proper. No, it's most frequently happening. So this is not a proper higher high and a higher low structure. These kind of small ranges can give you some bigger breakouts. So these kind of stocks, you can keep it in your radar. See, there is a difference between a sideways market and a consolidating market. So these are some accumulation happening in these kind of stocks. Okay, so this is a range bound structure. This is a sideways structure. So please avoid these kind of structures. But these kind of small accumulations are okay. Wait for the breakout and then you plan your trade. Okay. Clear, everybody? Clear? So everybody clear with whatever we saw so far? So we saw the trend using Dow theory, and then we saw the trend based on the monthly CPR, and then we saw based on weekly CPR, and we saw the entry and exit part. So far it is clear. Maybe we will take another 10 minutes. You can check your favorite stock. I want you all to check your favorite stock. I will give 10 minutes. Because the more you look at the charts, the more you remember the pattern. I want you to do the case study. Saurav, I want you to do the case study. If you are having any difficulty in any particular chart, please tell me. I will clarify. I want you all to do the case study. Sashidhar, yes, you can use 75 minutes instead of 60 minutes. Okay. So take 10 minutes, guys. Please go through some charts. If you are having any difficulty, I will help you. Check your favorite stock, or you can check Nifty few years back, few months back. You can check Bank Nifty few years, few months back. Recently you might have lost money in any particular stock. Maybe you can check that particular stock. Check your entries. See, Dow here, this higher time frame, higher high, higher low, you have to check. You have to check in weekly and daily chart only. Don't check in other time frames. Stop with the daily time frame. Other time frames, it's not required actually. Rajkumar, mostly it will not happen. Maybe you can give a try. Even if you look at the chart, you will easily understand the trend. So Canara Bank May 9, is it a good entry? So Canara Bank May 9, if I will tell you, I have not yet switched on the moving average. If the 20 is like this and if the 50 is like this, then it is a high probable entry. You can deploy 80% of your capital, and it is a medium size CPR only. No problem. Not a wide CPR like it is having in this month. So this is a very wide CPR. So May month is a medium size CPR. Maybe you can, if the 20 and 50 is providing supports like this, you can deploy 80 to 50% of your capital. If not, strictly you have to deploy only less than 50%. So yes, you got it. Understood. Understood. Who asked this? Canara Bank? Yeah, Anish. Manoj, I will come to the day trading part probably tomorrow. We will discuss more about call options, selling options. We will discuss more about it tomorrow. Right now, I want you to understand and find out the patterns. Once you find out the patterns, then punching the order is very easy. Guys, if you are having any queries, only you have to post it in the chat box. Right now, it is an activity time. Please check your charts. Don't ask your questions. This is not a Q&A time. Please understand, guys. It is not a Q&A time. Please check your charts. So which one? See, if you start asking me what happens, no, you feel like asking me every time. So, try to look at the charts. Take some time. Immediately, don't try to find the answers. Take some time. Take at least a few seconds to observe the pattern. Then you plan your trade. So, Jeevan Kumar, HDFC Life, yes, what you said is right. Here we got a beautiful entry. Uh, Here we have to exit because the candle is closing neck to neck below 20 and CPR, below top CPR. But right now it has given an entry. You can again take your entry without any hesitation. You have to re-enter. Some people, what they will do, once the stop loss is hit, they will go away and then they will not check that particular stock. But if there is a re-entry, you have to enter. It is a good breakout actually. It has broken a lot of days high. So this is a good breakout candle actually. So you have to re-enter. So Jeevan Kumar, hope you understood. Anish, see, can I use RSI or any other indicator along with this concept? You can do backtesting, yes. You can use and you can increase the probability of winning. That you can do. Keep checking your charts. Check as many charts as possible. So Tata Motors daily touched the previous month high, reversed towards monthly CPR. Now bearish. It will reach S1 as well. Right now, Tata Motors actually it gave a long entry somewhere, somewhere in this candle it gave a long entry, and again yes, here it is a stop loss, and here it is giving a short entry. Uh, yes, you can take that short till S1. Correct only. Hariram, correct only. See, if there is a narrow CPR this week and if it is not trending, then next week, even though if it is having a wide CPR, we can expect a trending market. For us, June 19, 10, 20. Sunil Kumar, which time frame you are talking about? Which time frame? It will help me to understand better. 5 minutes or 1 hour. Sunil Kumar, see, in stocks, don't do intraday trading. Probably I forgot to mention that point. Okay, in stocks, you should not do intraday trading. Stocks, you have to check daily time frame and hourly time frame. Stocks, you have to take swing trading only. In stocks, you should not do intraday trading. Intraday trading is only for index. I forgot to mention this point. Please don't forget. See, if one particular stock is confusing, then leave that particular stock. Don't focus on that stock. If a stock is confusing, that's all. Don't look at that stock. See, this is what I said. If a stock is in a dead range bound manner, avoid that particular stock. It is not having proper higher highs and higher lows. So avoid ITC. In stocks, you can use spreads. Definitely, you can use spreads. See, for swing trading, I am having a watch list. I will send you that watch list. That watch list is enough for you to focus on swing trading. Okay. Apart from that, don't select any stock. That is my personal advice. Okay. So this is my swing trading watch list. I will share this list in the Telegram channel. You can use that. So these are the stocks list I personally use. Apart from this list, I never look at any other stock. For right now, for study purposes, I'm showing you other stocks, but otherwise, I will not select any other stock apart from this list. And in recent time, I'm not trading in stocks. I'm focusing more on index only. Sankat Mahajan, when you are trading in stocks using daily time frame, in options chart is not necessary to see. You have to look at options chart only if you are trading in index, because each and every 5 minutes candle is important. But when you are trading in daily chart based on spot chart, okay, options chart you no need to look. Saurav Verma, I have missed your message. Maybe you can copy paste it once again. Fin Nifty. See, Fin Nifty, Bank Nifty, everything will be same. So, can I take a long position? Yes, you can take a long position, but reduce your quantity because almost the target is reached. Almost the target is reached. So maybe you can reduce your position sizing, or even you can, or or even you can go to lower time frames for day trading. Yes, you can do intraday in Bank Nifty, but make sure the setup is perfect. Bank Nifty you can do day trading, no problem. But make sure the setup is perfect. Right now, Nifty day trading is very good. Nifty day trading is also good. Bank Nifty day trading is also good. Don't uh, don't focus on Sensex every day. Sensex you can focus only on expiry day. Other days Sensex is very wild. Most of the time your stop losses will hit. Sensex focus only on expiry day. Every day you can focus on Bank Nifty and Nifty, no problem. But Sensex only expiry day. TNPL. See, you are looking at TNPL. Please use it for learning purposes. Don't take it for trading purposes. So TNPL, what is your question? May 12. Yes. See, Prem Gandhi, it is a high probable entry only. No, what is the question? What is the need to ask this question? It is a high probable trade. This is what I said. Don't ask me for confirmation. If you are having any confusion, ask me. This is a good entry. There is no need to ask me. See, Hariram, actually, uh, for Nifty, 30-50 points should be fine. But yesterday we were able to capture 100 points in Nifty. Again, it depends on the setup. So probably you can keep in mind 30-50 points. See, focus more on 20 and 50. Uh, as I said earlier, we have tot we have some refined our entries. So as of now, you no need to worry about 200 SME. See, always focus on credit spread. Don't focus on debit spread. Debit spread, debit spread is not advisable. Credit spread is advisable. Is there any stock like data called data patterns? See, select some good quality stock, no? 11th April, 11th April or 4th April. See, if you are selecting a stock, if you are selecting some unnecessary stocks, there will be a lot of traps will happen. See, you can follow this concept everywhere. Forex, cryptocurrency, commodity, everywhere you can follow. See, how to do option buying, option selling, I will say probably tomorrow. Today, I want you all to understand I want you all to make you understand how to identify the trend, where I should take a entry, okay, where I should place my stop loss. This is what I want you all to understand today. Taking spreads, selling options tomorrow. I will explain. I will tell you in the morning. But whatever I said today, you can use it for option buying. I covered option buying today itself. Entry, exit, stop loss. That is suitable for option buying. For option selling also, if you are experienced, you will understand. Otherwise, I will tell you tomorrow about option selling. So guys, I hope you all saw this. You all saw the screen. Taking entry at narrow CPR, taking entry at 20, 80% capital, 50% capital. This is for option buying. For option selling, I will say tomorrow. The strategy is same. I will tell you which strike price to sell and how to sell. Okay. So if you are focusing on option buying, then these entries should be sufficient. Okay. See, Rajesh Krishna, if you are used to trade in stocks, and if it is working for you, then it is fine. You can do. Okay, there are people who trade in stocks and they are making some decent profits. I know a lot of people, especially for intraday. Yes, there are few people making money in intraday in stocks. If it is working for you, then you can proceed with that. Don't change anything. If something is working for you, please follow that. You no need to change anything. But if you are going to try something new in options, in intraday trading in stocks, then I will advise you to avoid. See, generally I never look at India weeks. Okay, but for selling I look at open interest, and I used to check OA statistics. Okay, so that is mandatory. So generally for option selling, I used to look at this OA statistics. I used to check this trending OA. Okay, and then I used to plan my trade. So that we will discuss tomorrow. If you are looking for option buying, then probably today's session should be more than sufficient. Okay. See, you can find it based on the 20 and 50 structure. See, there are narrow CPR days where the market is range bound. Okay, many days are like that. Narrow CPR is there, but the market is range bound. It is because of the 20 and 50. If the 20 and 50 are zigzag, then it will be range bound only. See, yesterday Nifty was trending because the 20 and 50 is having a parallel structure, as I said in the morning. But if the 20 and 50 is not having a parallel structure, then it will be range bound. Thursday expiry is a good example. 20 and 50 are zigzag. So even in a narrow CPR day, this 20-50 structure plays a major role. See, you can see on this particular day, June 12th, it is a narrow CPR and the 20 and 50 are falling. So it was a trending day. But there are some days in a narrow CPR, the 20 and 50 will be range bound. See here. The 20 and 50 became flat. It is not rising. If you look at the structure of 20 and 50, look at this structure, it is rising. The 20 and 50 should be facing upside, or it should be facing downside. The 20 and 50 should not face sideways. The phase of 20 and the phase of 50 is important. They should be rising. See, for 200 SMA at present, we have only one significance. Whenever the candles reach 200, there are higher chances it will reverse. So that one significance we are having. Apart from that, there is no special significance. See, Veera Yagavendran, zigzag moving average, you can easily find out in live market. In 5 minutes chart, easily you can find out. So you observe for 2-3 days, it will be easy for you. See, EMA, see, right from day one, I am using SMA, and I want to give equal weight for all the candles and all the prices. That's why we are using SMA. Whereas EMA, it gives more weightage to recent prices only. EMA doesn't give weightage to all the prices equally. EMA give weightage only to the recent prices. So I don't want EMA, I want SMA, I want equal weightages. All right, guys, I think we can go for a coffee break for 10-15 minutes. The time is 4:15. The time is 4:15. Let us come back at 4:30. Another 30 minutes we have. We will discuss some concepts. We will have some Q&A, and then we will wind up today's session. I hope you all I hope you are all clear with what we saw today. Okay. CPR. Now, if the prices are above weekly CPR, then both are above the CPR. Here also above monthly CPR, here also above weekly CPR, then it is called as a high probable trade. Now you have to turn on the moving averages only in hourly chart, because you are aggressive swing trader. Your entry, your exit and stop loss is based on hourly chart only. So you have to apply moving averages only to the hourly time frame. For daily time frame, moving average is not necessary. Clear? So just look at the trend in daily time frame and then look at the location above CPR or below CPR. After that, give more importance to hourly time frame, above weekly CPR, and the moving, and look at the moving averages also for planning your trade. Now here, this particular month, June month, entire month, the prices are above monthly CPR. So Nifty is bullish. Right now, in hourly time frame, what I will focus on long opportunity. If you see over here, the prices are coming above 20 SMA, but look at the structure. Look at the structure of moving averages. As I said earlier, the 20 and 50 should be rising, or the 20 and 50 should be falling. But here in this case, I want the 20 and 50 should be rising. Only then I will plan a trade. Correct? I want the 20 to go like this, and I want the 50 to go like this. Only then I can go for a long opportunity in this candle. But right now, the 20 and 50 are facing on the downside. It's almost like a zigzag pattern only. The 20 is facing downside, 50 is floating, 50 is facing flat. So this is not a proper moving average structure. So what you can do is, you have to take a very less quantity only. Understood? Understood, everybody? You have to take a very less position sizing if you are aggressive swing trader. If you are aggressive swing trader, you have to take a very less position sizing, and your stop loss is hit. After that, you can see the 20 and 50 is not having any proper structure. The 20 and 50 are flat. Whenever the 20 and 50 are flat, what you will do? Whenever the 20 and 50 are flat, you have to turn off the moving averages. No need to look at the moving averages. Focus only on the candles. Focus only on the candles. So as per the candlestick patterns, probably you can take an entry in this candle. And again, your stop loss is hit. Okay. However, if you have taken a trade in this candle, your stop loss is not hit. The market is reaching your target. All right. So this is how you have to plan your trade for aggressive swing trade. Just keep in mind whether the market is bullish in monthly CPR or not. And then we have to focus on the trade setup in weekly CPR and hourly CPR. Weekly CPR in hourly time frame. Okay. So let us go back and let us check some trending examples. Let me go to April month. Okay, because May and June is a range bound month, so obviously you will see a lot of stop losses. So let me go to April. So look at the first week of April. In the first week of April, the candles are inside monthly CPR. Correct? But as a aggressive swing trader, I have to give more focus towards the hourly chart and weekly CPR. So though the prices are inside monthly CPR, I no need to worry. I can still take a trade in hourly time frame. Clear? The only point is you have to reduce the position sizing. Just compare. See, whatever we have seen so far, you are going to apply the same logic. But here you are going to compare both daily and hourly chart, and you are going to take a trade. If daily is above monthly CPR and if hourly is also above weekly CPR, then it is a good opportunity for us to plan a trade. Probably first I will draw and show. Maybe then you can understand even better. Let me draw and show you like I did in the afternoon. So this is, let's assume this is weekly CPR. So this is weekly CPR and this is monthly CPR. So let's say the market is above monthly CPR. And in weekly CPR also, the market is above weekly CPR and the 20 and 50 is providing supports. Then again, it is like a high probable trade. Okay. Or let's say the market is below monthly CPR. Below monthly CPR in the sense the location can be anywhere. Okay, the candles can be below CPR, below S1 or even below S2 also. So just imagine below CPR anywhere and above CPR anywhere as per daily time frame and monthly CPR. So above monthly CPR anywhere, below monthly CPR anywhere, my full focus is on hourly chart and weekly CPR. So I need a structure like this for a bearish trend. Clear? So this is for a bullish condition. And this is for a bearish condition. Clear, everybody? And this is what we call as a high probable trade, of course. High probable bearish trade, probably. And here, high probable bullish trade. The same logic. Okay, clear? So, in this case, what you will do? The capital deployed will be, it varies between 50% to 80%. Because sometimes above weekly CPR, above monthly CPR, but the CPR will be wide, 20-50 will not be having a proper structure. So depending upon the setup, 50 to 80% capital you can plan. Okay, same vice versa for here as well. 50% to 80% of your capital you can plan. Clear, everybody? Clear, everyone? So we are actually combining weekly CPR and monthly CPR together. Understood, everybody? So whenever you are taking a position, so in the afternoon session, we saw how to take an entry based on moving averages, CPR, the candle location. So when you are taking a trade in hourly chart with weekly CPR, make sure in monthly CPR also the prices are above CPR and for a long trade and below monthly CPR for a short trade. So this will help you to sit with the trend. It will help you to ride the trend. It will help you to stay with the trend and you will not be against the trend. Sometimes that sometimes the setup will be opposite. Sometimes the candles will be above monthly CPR. Sometimes it will happen on the opposite side. Okay. Monthly CPR will be below, but in weekly CPR it will be above. So in this case, what you will do? Sometimes monthly CPR will be above and weekly CPR will be below. In this case, what you will do? In this case, you have to deploy 20% to 50% of your capital. Clear? Less quantity. Yes, that's all. So above, below. If it is opposite, then reduce your quantity. That's all. Having the monthly CPR in mind is very, very important. Okay. So nothing new I have said. The same thing I have shared with you. Clear? So I hope it. So I hope everybody is clear, right? So that is what I have given here. High probability of winning is both above weekly CPR and above monthly CPR. Okay, and below monthly CPR and below weekly CPR, high probability of winning. Sometimes the candle will be above monthly CPR, but it will be below weekly CPR. So you have to reduce your quantity size. And sometimes the prices will be below monthly CPR and above weekly CPR. You have to reduce your quantity size. Okay. So far clear, everybody? So most of you would have been clear by now. So whenever you are taking an entry at CPR or above R1, no, if you are an option buyer, you can buy at the money strike price. Okay, you can just buy at the money strike price and you can wait for your target if you are an option buyer. So as a buyer, I have already said about the entry part. So if you are taking any entry, always for the long side, our entry is at always for bullish, our entry is at CPR R1 and R2. So if you are a buyer, you can buy at the money strike price straight away, no problem. And if you are a seller, then we have to sell some OTM options. We have to check some important levels, and based on that, we have to select the strike price. Okay, so that we will see tomorrow. And for intraday trading also, I hope you're all clear with what we saw today. For intraday trading also, in 5 minutes chart, we saw yesterday's Nifty chart. Okay, and we saw few days back Nifty was trending. That chart also we saw. So we saw a lot of examples for even in 5 minutes chart. So at CPR below S1, below S2, and at CPR above R1, above R2. So many examples we saw for 5 minutes chart also. So if you are an option buyer, you can straight away you can buy that particular at the money strike price. It is easy. Okay. One important point I want you all to note it down. On Friday, okay, on Friday, be an option buyer. Okay, it is mandatory. Okay, these are this is some mandatory point. On Friday, be an option buyer. Okay, and then trade in Sensex only on expiry day. These are some important points. You can note it down. So in even if you are trading in Bank Nifty for intraday, select only trending days. Okay, don't select any other day because already you know the premium of Bank Nifty is very high. If you are trading in any other day, the premiums will not move. So it will be like a waste of time for you. So if Bank Nifty is having a narrow CPR, and if Bank Nifty, how do you identify a trending day? So narrow CPR is one option for identifying a trending day. Okay, above R1 and previous day high, or below S1 and previous day low. This is how you identify a trending day. Clear? Clear, everybody? So these are the ways to identify a trending day. Trade in Bank Nifty intraday only on trending days. Okay. So for example, yesterday Bank Nifty was trending. So probably above R1 you could have taken a trade. Above R1 or above previous day high. Both the entries should be right. Okay. But apart from that, if you are trading on any other day, the premiums will not move that much. So probably here you can plan a trade above CPR. You can buy a call option. You can exit at previous day high. So select only trending days. Okay. So here 20 and 50 is falling below S1. You can plan a trade. Okay. So this is how you select a trending day. Okay. So when you are trading in intraday in Bank Nifty, please be very careful because the premiums are very high. Premiums are very high. So these are the conditions. These are some mandatory conditions. When it comes to Nifty, there is no restriction. You can trade in Nifty every day. You can trade in Nifty every day. So these are some common points. No, the Bank Nifty we will trade on monthly expiry only. Generally last week of the month, Bank Nifty will be having a very good premium decay. So we can easily make 2% on a single day by selling options because the premiums will be very high. Easily you can make 1.5%. So these are some important points. Please note it down. Don't take any screenshots or don't take any photos. Please write it down, only then you will not forget. See, when you are doing intraday trading, it is mandatory to check all the time frames, check the trend in weekly, daily, and then check monthly CPR, weekly CPR, and then you have to check a 5 minutes chart. So if you are a aggressive swing trader, what you will do, you will combine both monthly CPR and weekly CPR together. Now similarly for intraday trading also, you have to combine weekly CPR and daily CPR together, and you have to take a trade. Clear? So similar to what we saw here. Okay. See, let's say you are doing a swing trade, and if you are facing aggressive gap up or gap down, as soon as the market opens, you have to exit. Okay, so that's why you have to select some good quality stocks. At times, some good quality stocks also are having a gap up and gap down. So that's where this high probable and low probable trade will greatly help you. Okay, so it's okay. It will be manageable. Don't worry. See, for option buying, strike price selection is always at the money or one or two strikes in the money. Okay, don't select 50 strikes in Nifty. 150, 250, 350. Don't select 50 strikes in Nifty. Okay, buy at the money strike price or one or two strike prices in the money. This should be sufficient. Because on Friday, there will not be any premium decay. That is why we are doing option buying on Friday. On Friday, be an option buyer because there is no premium decay. See, yes, if you want to use the three layouts like this, then definitely you have to take a premium subscription in TradingView. So this will help you to look at the three layouts together. So this is how my chart looks like in live market. You have to check all the three. Next expiry. Harsh, you have to select next expiry only. And again, see, for aggressive swing trade or for conservative swing trade, you can focus on Nifty and Bank Nifty, but don't focus on Sensex, because Sensex most frequently a stop loss is hit, will be hit. Okay, most frequently a stop loss will be hit. Trade in Sensex only on expiry day. If you are having any queries, you can ask me a queries. We can. So the time is 5:10. Probably till 5:30, I can take your questions. See, hourly and 5 minutes chart, again the same thing. CPR by KGS indicator in fires is not possible. In fires, you are having CPR indicator, but not my indicator is not available. It's not possible. When to see options premium chart? See, options premium chart, you have to check only for index, only for intraday trading. Okay. So whatever points I am telling, please note it down, because some people will ask the same question again and again. So you have to look at the options chart only for intraday trading, and that too only for index trading. Otherwise, no need. Veera Raghavendran, probably you can check the recording later. Okay, because again I cannot explain the moving averages. Okay, I'm quite exhausted, so you can check the recordings later. No worries. Okay, hourly chart and 5 minutes chart for trading. Again, the same logic, guys. Okay, there is nothing difference. You can check this drawing. So you saw the drawing, right? So what I will do is just I will change it to daily CPR. That's all. 5 minutes start with daily CPR. Okay, and this one, hourly with weekly CPR. Same logic. Understood? That's all, guys. So somebody was asking 5 minutes and hourly chart together. That's all. No big difference. For intraday trading, when you are looking at 5 minutes chart and daily CPR, check whether the prices are above weekly CPR or below weekly CPR. That's all. Just to get an idea. We will not look into hourly chart for from 9 o'clock till 3:30. We will not look at hourly chart. In the morning at 9:15, 9:20, you will just see above or below. That's all. Very simple. You got it right? I hope you can get me. Let me go to 5 minutes chart in Nifty. Now let's say tomorrow, yesterday I took the trade. So what I will do is, this is how my chart will be looking like. Okay. Now let's say I am sitting at 9:15, 9:20. When the market opens, I will check whether the market is above CPR, above weekly CPR or not. That's all. So here I will have an idea, like around 750 or 760 weekly CPR is there. I will have an idea. So let's say this bottom CPR. Okay. So you can see this weekly CPR in 5 minutes chart. So I will just have an idea. Okay, candles are above weekly CPR. So the hourly trend is bullish. That's all. After that, my chart will be like this. I will be looking from 9 to 3:30. I will be looking at this chart only. So that's the role of hourly CPR. Above CPR, that's all. If it is inside CPR, okay, it is inside CPR. Hourly is range bound. So I will be concerned only if 5 minutes is also having a wide CPR. Now let's say, see here, see on Thursday expiry, look at this. On Thursday, Nifty expiry was there. Hourly is inside weekly CPR. So inside CPR means what is the trend? Inside CPR means the trend is range bound. And moreover, on Thursday expiry, the range is also bigger. See here. The distance between CPR and S1 is wide. And moreover, look at the moving averages. They are zigzag. So we will have an idea. Okay, the market is inside weekly CPR. So it is going to be a range bound market. Now in 5 minutes chart also the range is bigger. So it is going to be range bound. This is how we will have an idea. So the market is going to trade inside this range, CPR S1. This range the market is going to trade. Okay, so there is no bigger role for hourly chart when you are trading in 5 minutes. Just have a rough view, that's all. See, weekly CPR is having ascending CPR, daily CPR is having a descending CPR. That is not having too much significance. So don't dig deep into ascending descending CPR. Ascending descending CPR you have to see only when there is a trend reversal. Now let's say for example, on Thursday and Friday we were having a descending CPR. So descending CPR means the trend is bearish. But yesterday Friday what happened? The candle opened above CPR and it is trading above R1 and previous day high. So it is called as a trend reversal CPR. This is called as a trend reversal CPR. This is no more called as a descending CPR. It is called as a trend reversal CPR. Because in a descending CPR, the candle should trade below CPR only. But here the candle is trading above CPR, so it is a trend reversal CPR. So this significance is there for ascending descending CPR. Apart from that, there is no bigger importance for ascending and descending CPR. See, June 17, what difficulty you faced? You please tell me. See, June 17, the market is inside daily CPR. That's all. No need to look at the market. It is range bound. It is range bound. So you have to stay away from, you should not do any option buying, but probably you can do option selling. And of course, Tuesday it is a Sensex expiry. Sensex expiry, we made close to 1.5%. Daily candle, it is above CPR. That's all. That is the significance. See, you can identify it as a range bound day whenever it is having a wide CPR, when the candles are inside CPR, or when the moving averages are zigzag. Take any range bound day, the moving average will be zigzag. Okay. So let me take these 2 days. Okay. So take these 2 days. On 9th June, the market was range bound because it is a very wide CPR. Okay, it is a very wide CPR. Look at the wide CPR. So 9th June, it is a range bound market because it is having a wide CPR. Now 10th June, it is a narrow CPR, but it was inside the previous day high and previous day low. It is a range bound market. And look at the moving averages also. The moving averages will be zigzag. See, this is what I said. Here the moving averages are rising, but since it is a wide CPR, it became a range bound market. Here we are having a narrow CPR, but the 20 and 50 are not rising, they are not falling. They became flat. Look at the face of 20. The face of 20 is here. The face of 20 should be like this, above. It should not be like this, flat. Got it? So this is how we identify a range bound market. Spot chart is enough. We are not looking at futures chart. Futures chart is not necessary. Spot chart is enough. See, Anish, I have already said what you should do on Friday. Whether it is a wide CPR or whether it is a narrow CPR, whatever it is, you have to be an option buyer. That's all. This is trial and tested. That's why I am telling. Even on Friday, selling options, even if it is a wide CPR, selling options is not a. The premiums will not decay much. Higher the chart, the risk is less. Of course, yes. See, real-time Sensex chart, you have to subscribe in TradingView if you want real-time Sensex chart. Probably I have subscribed, so I am having real-time Sensex chart. So if you want real-time Sensex chart, you have to subscribe in TradingView separately. No, for Sensex, you have to purchase separately. The data you have to purchase separately in TradingView. Same strategy works in commodity, forex, cryptocurrency. Already I have said, Suresh. How to identify your indicators correctly? Probably I will share the link. You can add it to your favorites. Okay. I will share the link of my indicator. You can add it to your favorites. So I have shared the indicators in Telegram. You can join. You can use it. See, yes, Anbars, even if the expiry is changed, still Friday will be a option buying day. And again, if the expiry has changed to Tuesday, Wednesday also will be a buying day. Every Wednesday also will be a buying day for Nifty. See, whenever Dow theory breakout will automatically happen if the prices are above CPR and 20 is supporting. You can check any chart, any example. Dow theory will automatically break once the prices are above CPR and above 20. See, the 2050 rising above 200 or below 200, both the significance is same. Both are same. The energy level will be the same. Above 200 and below 200, the energy level will be the same. But generally, for bullish trend, above 200 is advisable, and below 200, for bearish trend, below 200 is advisable. So, in general. Shardul, when it comes to index, Nifty or Sensex or Bank Nifty, you have to do both. You have to do both option buying and selling. Always look for every opportunity. Sajid, I am able to see your comments. See, there are few questions which are very basic. So those questions I am skipping the questions. Hariram, I have already answered. Stock options chart, you have to look at the options chart only if you are doing intraday trading. Stock options you are going to do only for swing trading. So not necessary to see stock options chart. Already I have answered the question. Let me come to this presentation part. So now you people all understood how to identify the trend, correct? Most of the beginners, they don't know the trend, but now you know how to identify the trend, yes or no? How do you identify the trend? Using Dow theory, how you will identify the trend? Pramod, very good. Pramod is the first person to answer. Higher high, higher low. So using Dow theory, you will identify the trend by checking the general higher high and higher low, lower high and lower low. Using CPR, how you will identify the trend? Above or below. That is enough. So whenever we are having higher high and higher low, the candles will be above CPR. Whenever we are having a lower high and lower low, the candles will be below CPR. Okay. Now many retail traders, now even if you know the trend, still you will lose money if your entry and exit is at a wrong location. So poor entry and exit. So now you know where you should enter and where you should exit, right? So where you should enter, three locations I have shared. For bullish trend, where you will enter? CPR, R1 and R2. And what should be the moving average? It should be rising for bullish at support of CPR and 20 SMA, correct? So CPR, R1, R2, 2050 rising and support. So vice versa for short. CPR S1, S2 below 2050 falling correct. And exit also, if you are taking a trade at CPR, R1 is your exit. If you are taking a trade at R1, R2 is your exit. If you are taking a trade at R2, R3 is your exit. And exit also you know very well. Now actually we covered this part also. Trading against the overall market sentiment. So what happens? The overall trend will be bullish or bearish. Okay. But in lower time frame, people will take a wrong trade. Let's say, for example, the higher time frames, overall trend will be bullish. So what happens? The market will go down as a fake breakout or something will happen for intraday. People will take a trade and they will lose money. To avoid, you are not by looking at two CPRs together, weekly CPR and monthly CPR together, looking at daily CPR and weekly CPR together, we are avoiding trading against the market trend. You understood my point? So above, we are we are looking at the trend like that. Correct? Above weekly CPR, for example, above monthly CPR. So by looking at both the CPR together, you are not trading against the market trend. Even if you are trading against the market trend, you are reducing your position sizing. Got it? Understood, right? Trading against the overall market trend. Some people will trade against the market trend. Higher time frame Nifty on. Now we saw in daily chart, Nifty is bullish in daily. Let me show you Nifty chart so that you may understand better. So I hope everybody note down this point. So let me delete that. So see Nifty. So we saw Nifty just now. In weekly CPR, it is above. Hourly chart, it is above weekly CPR. And in 5 minutes chart, it is above daily CPR. So this is a high probable trade and staying with the trend. See above weekly CPR, above R1, R2. So the trend is bullish. So this is a high probable trade. So if you look at the previous example, look at see on Wednesday. On Wednesday, Nifty came down below S1 and previous day low, but it did not fall. Why? 20 is acting as a resistance, but no strong fall. Why? Because on 18th June, on weekly CPR, the candles are inside CPR. Can you see? The candles are inside weekly CPR. Can you see? So this is what called as trading against the market sentiment. So here the prices are inside weekly CPR. So that what is the overall market sentiment? As per hourly chart, the overall market sentiment is sideways. So on 18th June, even though Nifty is coming below CPR, even though Nifty is coming below S1 and previous day low, there is no bigger fall. That's why we are saying we should not trade against the market sentiment. Understood? So, understood everybody. Don't trade against the overall market sentiment. So that is why we are comparing both the time frame and we are taking a good trade. When you compare both the time frame, you will have a view that the market is not going to fall, the market is not going to rise. So that is the explanation for this particular point. Trading against the overall market trend. So now based on Dow theory and CPR, you know the trend. For entry and exit, you will use CPR and moving averages together. By looking at two CPRs together, daily CPR, weekly CPR for day trading and weekly CPR and monthly CPR for swing trading, by looking at two different CPR, you are staying with the overall market trend. Now emotional influences. Now let's say you know Dow theory, you know CPR, you are taking entry exactly at the CPR and 20 SMA. You are taking trade perfectly as per daily CPR and weekly CPR. You are looking at 5 minutes chart, you are looking at hourly chart, and you are taking a trade. But still you will lose money if your emotions are not in control. You have to follow proper position sizing. Otherwise, your emotional influences will happen. Many people, they know the trend, they know CPR, they know everything, entry, exit, 20 SMA, everything they know. But what they will do, they will take huge position sizing. They will take huge quantities. But you have to follow high probable trade, low probable trade. You have to follow that properly. In every trade, if you are taking huge quantity, what happens? Definitely you will get emotional imbalance. Let's say there is a wide CPR. So you have to take position for 20% of your capital or 50% of your capital. But in a wide CPR, if you are taking 100% of your capital, if you are taking huge quantity, what happens? Then automatically your emotions will not be balanced. You will get fear, you will get stress, you will be in a tension. So emotional influence, you are not able to control your emotions when your quantity is high. Now let's say you are taking let's say you are trading in equity. Let's say you are trading in Nifty. The lot size is 75. Even if you place 30 points stop loss, you are going to lose only 2,250. Correct? Even if you place 30 points stop loss in Nifty options, you are going to lose only 2,250 in a single trade. But you people are losing 10,000, 20,000 in a single trade because you are placing huge quantity. Correct? Correct? Yes or no? So, you will be emotionally influenced because of the position sizing. You are taking a huge quantity, so ultimately the fear is allowing you, so you are getting a lot of fear. You are not able to sit in the trade, and in a single trade you are losing a huge money. So emotional influence is also controlled by our high probable and low probable trade, the position sizing. So all the four parts we have covered today. So tomorrow we are going to focus on option selling, intraday trading, and we are going to do a lot of case studies and lot of charts. Clear everybody? So far today is clear for everyone? Can you please post it in the chat box? So I want everybody to go now. I want you all to look at a lot of charts. Focus on the high probable trade. Don't focus on the low probable trade. See, your money is very, very important. Stop losing money. Start making money. Focus on high probable trade. Okay? Focus on high probable trade. Take a break for 30 minutes or 1 hour and start looking at the charts. Look for Nifty, look for Bank Nifty. If you are looking at stocks, please follow my swing trading watch list. Okay. If you want to backtest in charts, in Telegram channel, I have shared the swing trading watch list. Follow that stocks alone. That is enough. If you have not yet joined that students Telegram channel, please open your email, check your spam folder, check your junk folder, and join the Telegram channel immediately. See, Chandrasekhar, this is what I said. If you are trading in 5 minutes chart, 5 minutes chart and hourly chart, daily CPR and weekly CPR is enough. 5 minutes candle above daily CPR, weekly candle is below weekly CPR. So 5 minutes is above daily CPR, hourly is below weekly CPR. So in this case, you have to look at the 5 minutes chart exclusively. More importance has to be given in 5 minutes chart. Okay. Look for 5 minutes chart to trade below CPR. Check 5 minutes chart to break S1 previous day low. And you have to give more importance to the 5 minutes chart. Okay. So do a lot of practices in charts. The more you look at the charts, the more you understand how the market is moving. Praveen Kumar, for everybody email is sent. Check your spam folder, check your junk folder, check everywhere. Because more than 10 emails I have sent from yesterday. Today 5 emails I sent, yesterday 5 emails I have sent. So please check your email. So above daily CPR, below weekly CPR. So this is a low probable trade. Already we have discussed. I think I shared it in the drawing. So Chandrasekhar, I think you asked this question only. Above daily CPR, okay, and I have crossed it. Above daily CPR, below weekly CPR. So it's a low probable trade. Again, tomorrow we will see a lot of examples. So that shouldn't be an issue. So I think we can wind up today's session. Please join tomorrow's session at 10 o'clock sharply. Okay. See, log into the website after 10 o'clock, guys. Okay. Many people are logging in before 10 o'clock. So after 10 o'clock, if you are clicking on the link, it will not, sometimes it will not join. So it's like booking Takkal ticket. Okay. When you are booking Takkal ticket, sharply at 10 o'clock, only you have to log in. So same way, you have to log in sharply at 10 o'clock, and then you can and log into the Zoom website separately. First itself, you have to log into the Zoom. Okay, so log into the Zoom first, and then log into my course website tomorrow. Join sharply at 10 o'clock. We will see how to do option selling for intraday. See, follow 75 minutes if it is comfortable for you. If you feel 75 minutes difficult, then you can still continue to follow 1 hour chart. Okay, but I will advise you to follow 75 minutes. But if you are used to 1 hour chart, then please continue, no problem. Still the strategy works. But I will personally advise you to follow 75 minutes chart. See, if you ask me how much fund is needed to do option selling, I will say at least you should have 10 lakh. At least you should have 10 lakh. 25 minutes chart, instead of hourly chart, we will use 25 minutes chart. Now for weekly CPR, we are using 75 minutes chart. You can also use 25 minutes chart. So that one flexibility is there for weekly CPR. Weekly CPR, we are using 75 minutes chart. You can use 25 minutes chart also. See, 10 lakhs not for one lot, 10 lakhs for risking 1% in a single day. Now, let's say your capital is 10 lakh. You can 1% you have to risk in a single day. So 1% is 10,000. According to the 10,000, you have to take position. I will show you tomorrow so you will understand better. So today we covered how to identify the trend, where I should enter and exit, where I should place my stop loss. Okay, so everything is covered today. Option selling you can do for swing trading also. I will cover that part also. But majorly option selling is for intraday. But for swing trading also I will cover, no worries. Yes, we will cover only spreads. See, when it comes to option selling, I am going to teach only the spreads. I am not going to teach any ratio spreads, diagonal spread, calendar spreads. Okay, and I'm not going to tell about adjustments. Okay, so those things are not my cup of tea. So my option selling will be in very, very layman term. Okay, I will tell you tomorrow. I am personally doing option selling for intraday only. For swing trading, I am not doing option selling. Because every day, because I am sitting in front of the screen every day. So for me, intraday option selling is comfortable. I no need to do swing trading in option selling. Alright guys, so we will wind up today's day one session. So I hope you all enjoyed today's session. See, every day 1%, please don't have that mindset. 1 week 1% is possible, is definitely possible. 1 week 1% is definitely possible, and I will help you. So there are 4 weeks in a month. 4% in a month is possible. Even if you lose 2%, still you will end up making 2% per month. So 0.5% per week is easily possible. Any trader can make 0.5% in a single week. I want everybody to be a profitable trader. So I am ready to give my full support and guidance. See, what I am personally following, I am teaching you. I am not teaching one thing and I am not following some other thing. From day one, I'm watching CPR, I'm teaching CPR. Everybody knows. So I definitely want everybody to make profitable trader. All right. So thank you guys. Let us wind up today's session. See you all tomorrow. Join sharply at 10 o'clock. Let's explore more about intraday trading and option selling. All right. So please work on the charts. Look at as many charts as possible. Thank you. Bye.